Hello everyone, welcome to another live stream, another Monday, start of the week. I hope you're doing well. Hope you got well rested over the weekend. I'm still getting my thoughts together. There has been quite a lot of developments as far as I can follow. So, it's Monday. I need Mondays to usually see what's up in the market, see what's moving, see what's not moving, see what has changed over the weekend. The biggest thing last week, and that took a lot of my energy, if I'm being honest, was watching the yen. So watching the Japanese yen, we had an intervention. It was not just an intervention on the side of the Bank of Japan. It was supposedly a joint intervention. So an intervention that was kind of correlated with the Bank of Japan and with Scott Bessent, I believe. So Scott Bessent so United States Secretary of Treasury. And when those two get together, if you look at the past few examples, when those two get together, you can have a massive move on the Japanese yen. So if you look at the JXY, just a straight shot to the upside, massive explosion up, appreciation of 4% or 3.7%, just a massive move. I did take advantage of it. Fortunately, I was short on the Swiss yen. So this trade, I would say one of the best, if not the best trade of the year so far. It was a signal in the A1 Trading Discord as well. So if you want to join the A1 Discord, get all of my positions, such as this one. Let me post the link right now. So let me post the Discord. Whoop. Let me copy the link. Go to the comments. Okay. Okay, you can find the link to the Discord. You can join for free. So you can join for free, but if you want to get all of the trades from Nick, Chris Pulver, Iwind, Alan, and me, you can join the paid section, and you can use the code MARCO to get, I think it is 25% off. Okay, so 25% off on the Discord. So massive trade for me, big runner, took it with 1% risk across all of my accounts. I did take 30% off somewhere along the way, and I'm letting the rest run. I think this could be long-term a nice story. I think it could be a start of a trend. I think we could get the case of, let's say, 2024. So in July it started, and you can see a big drop lower. We had a surprise rate hike from the Bank of Japan somewhere in here as well. Yeah, here it was. So on the 31st of July, we got a surprise rate hike. And I think a similar thing happened in 2022. In 2022, in October, was it? Yeah, so somewhere here, we also got the intervention. And we got the sort of the Japanese government wanting to see a stronger yen. So it was a prolonged trend. That's why I'm saying that this could be just the start, and we could see this go lower. We could see this trend lower, and that's why I want to stay in. So I'll move my stop loss today. You will be notified. If you're in the A1 Trading Discord, you will be notified. I'll probably move the stop loss, I don't know, maybe around 197, something like that. Maybe just above 198. Probably above 197, because if we do retrace this whole move, then it doesn't make sense to be in this long term, because I'm betting on a bigger move lower. So if we start retracing the intervention, well, it's not going to be a really bearish sign, is it? Okay. So Sluggy says, so hello Sluggy. Marco, this yen intervention could be different, as when the US and Japan do a coordinated intervention, it does last. That is absolutely true. So when they get together, the interventions, they do last for a while. So this could be a good ride to the downside. It's not just an intervention on the side of the Bank of Japan. It is a joint intervention, a joint thing. So yeah, it could be a big one. Could be a pretty good trade right there. Other than that, if we put the yen on the side at the moment, because the most opportunity was in the yen lately, absolutely. I did try and take a stab on the Nasdaq long, which would have worked pretty good if I didn't get taken out. So got taken out before the move to the upside. And that was because the Fed, so the central bank of the United States, have flipped from being hawkish to actually more dovish. Or at least the market was expecting them to be hawkish, and they weren't hawkish. They were actually had a dovish meeting last week on Wednesday. If you put the yen on the side, it is still all about oil. It is still all about the Middle East, right? So as far as the Middle East goes, I did see some positive developments, or at least the market is interpreting it as positive developments. Yeah, I guess there's a pause in Iran attacks. Brent falls as US and Iran peace talks resume. I don't know. I haven't spotted much on financial juice, so I haven't seen much when it comes to the breaking news here. Let's see. Iran-US issue should be addressed at a later stage. Reaching an agreement with Oman over the route is not enough for the reopening of the strait as long as US aggression continues. It's getting tricky. It's getting very, very tricky because I'm getting mixed signals. Oil is up and now it's down. It gapped lower. The strait is closed, then it's open. Then it's closed, then it's open. Let me see if we go to the Hormuz traffic monitor. Let's see. So the latest update was the 23rd of July, but I still think the strait is closed, basically. Yeah, the strait is closed. So if you think about it logically, as far as looking at the actions from US and Iran, I'm betting that the strait remains closed for a longer time. I'm betting that they don't reach an agreement. I'm betting that we just get noise about a possible deal, about a possible agreement, and that's about it. So I would personally say at the moment, Brent is more likely to go to 100 than it is to go back to, let's say, 70, 71, 72. Now, I would like to place that bet by buying dollars. Okay, but buying dollars at the moment with the yen intervention and with the Bank of Japan and the Scott Bessent correlated move, well, it's not really a smart thing to do because the dollar is losing value across the map. Okay, yeah, pretty much the dollar is losing value across the map because of the yen intervention. So what I'm thinking is, let's be more patient for now and let's look to sell dollars maybe in the longer term. I do believe that the employment numbers should come out fine, and that could be actually a good catalyst to sell dollars, because if the employment is good, that could be a bullish catalyst for the dollar, because if the employment is good, the Fed can keep rates higher for longer, and that's usually bullish for the dollar. If you open this up, usual effect, actual number greater than the forecast is good for the currency. So if the actual number is greater than the forecast, or here with the NFP, actual greater than the forecast, good for the currency. So if the jobs market is strong, that is actually bullish for the US dollar. But at the moment, I would be very hesitant. I would be very hesitant to buy the US dollar because of this. Right? Because of this, I just don't think it's the right play to go. That's why my head is a bit mixed. The CPI should, in my opinion, come out higher than the previous level, and which is again bullish for the US dollar. So the only event that I would like to place my bets on, the only event would be the Fed meeting in September. So Fed Watch Tool. The next meeting is supposed to happen on the 16th of September, and I would probably look to sell dollars and go risk on either into that meeting or right after the meeting. from the information I gathered, the Fed is going to choose the more dovish route. They are going to wait for the inflation to really spiral out of control. So if we look at the CPI, inflation CPI, let me see. Yeah, so basically, I'm guessing that the Fed is waiting to see this go above 4%, or maybe even above 5%. Okay, so yeah, or not above 4%, but I think they're gonna start to react. I think they're gonna turn hawkish after we go to maybe 6 or 7%. And no, I'm no longer gonna do the 6-7 joke. I'm kind of over it now. But the last time that the Fed got hawkish, inflation really spiraled out of control. So I don't think these numbers actually do concern them. If you look at the past, the Fed is usually more dovish. They always choose the more dovish route. They hate rate hikes. So when the market warrants a rate cut, they cut immediately. But when the market warrants hikes, like it is right now, they essentially they don't want to hike. They want to prolong that. They want to, what's the name? Let's say kind of push the ball down the road, So hope and prolong. Yeah, basically. The Fed is hoping that this naturally starts falling lower and that they don't have to hike rates. But I personally believe that the strait will remain closed, that the inflation will keep on creeping higher, and at one point in time, they're going to have to hike. And it's tricky because the trade then would be to buy dollars, right? The trade for higher inflation, for a Fed that actually is concerned about inflation, the trade is to buy US dollars. But if they're going to be more dovish, then the dollar is actually going to lose value. So that's tricky, okay? Let's see the comments. Good morning, coffee time, sip and poop. Fatir, hello. Sluggy, hello. Kier, welcome. GPUSD, I was aggressively shorting everything against the yen. Okay, that's good. Good morning. NZD Swiss, Aussie Swiss. If there's an intervention again, but the edge finder, it's bullish. So the edge finder does not look at the intervention. I would say for the yen, I would only focus on the intervention at the moment. Okay. So I would only look at what the Bank of Japan is doing and what it has done in the past, how long the intervention goes, and is it a joint venture between the US and Japan? And now give me 1 second to go grab a glass of water. Okay. So whatever readings you're getting, as far as the yen is concerned, I would be patient. As I just mentioned, I would focus on that intervention. I also think the overall fundamentals on the yen are bullish because you're getting the government in Japan that wants to see a stronger yen. So the current government, Takaishi, what is this? So this lady and her government, they are losing popularity. They are losing votes. So I think they want to do everything that is possible in their power to keep their votes up. And one problem that they are having is that the yen is that the yen is losing value. Okay, so I think they're going to do everything that they can to push this up. They can do an outright intervention. like you saw here, they can do a surprise rate hike. So they can force the Bank of Japan to do a surprise rate hike. Or they can force the pension funds to start selling foreign assets and buying domestic. So sell US bonds, buy Japanese bonds. And that has actually been happening in the background. So, yeah. If you have been following the situation in the background, the Japanese pension funds, the GPIF, let's try to find that. Pension funds. So the government pension funds, pension investment funds. Yeah, see this? So they have already started to invest into foreign, invest into domestic. So sell foreign, invest into domestic. The effect of that is bullish for the Japanese yen. So you would expect the JXY to continue going to the upside because you have that added pressure in the background. Sell USD or buy the yen. This week, plenty of US jobs data. I think we're good to short USD on bad data. Well, yeah, I would say that's a trade idea, definitely. So if you look at the US dollar, so selling it would be a smart way to go, right? I think so. But you need some sort of a catalyst. As I mentioned, personally, I believe that the jobs data. So I believe that the jobs data. Yeah, here it is. So the NFP that it comes out fine, that it comes out healthy. So that should actually be bullish for the dollar. That's why I don't really see a trade on the dollar at the moment. Excuses to delay it. Yeah, I think the tactic is. So the tactic is pray and delay. That's what the Fed does most of the time. So they love to cut rates. They hate hiking rates. That's why pray and delay is the tactic for them. So this yen intervention will play its part in the carry trade as well. Might see prolonged weakness in Aussie. Absolutely, absolutely. So this does hurt the carry trade. The carry trade being is you sell the yen and you buy a high yielding currency. So you buy the dollar, you sell the yen, you get the swap. You can find that in the Edge Finder. So in the scanners, carry trade scanner, USD JPY. Okay. So you can see the base rate 3.75, the quote rate 0.75, the divergence 3%. So the carry direction is a buy. Okay. So you basically receive income if you buy USD JPY. You should receive around 3% per year, I believe, in this case. But let's say the Bank of Japan does a surprise rate hike. So let's say the quote currency rate starts going to the upside. Well, that definitely changes things. That definitely changes the situation. It changes the profit potential. It lowers the divergence. So you get less money if you're buying. So you could get a couple of big players, a couple of big funds exiting the carry trade, which further fuels. So that further fuels USD JPY to go lower. For this week NFP, good news is bad news. Analyst in Bloomberg said that if UJ fell and hold under 155, the carry trade might start to unwind. 155. Well, could be the case, but I think it's not. I don't think it's a specific level. I don't think it's a specific level. I think it's gradual. So I think some people probably already exited their carry trades, but if it goes lower, more and more people will exit that. Now, personally, I'm waiting for, or I'm expecting a bigger downtrend here, because the Japanese government has expressed the will to push this chart lower, and they have free tools in their toolbox to do it. So yeah, I think that that is a good trade. That's why I will keep on holding my Swiss yen short. I think this is more of a longer term position. I will trail the stop loss and keep on holding that short for now. This could be the start, as I showed you. So in 2024, so 2024 here, pretty nice downtrend. If you caught the top, you would have made some pretty good percentage. And then 2022 in October, here it started. I think this was the intervention. Let me actually see if we start new. Yeah. I would say this was definitely an intervention right here. And then another one, and another one right there. Here, probably another one. So that's how the situation. That's how the situation looks to me at the moment. US oil. So oil is lower. Brent gapped lower as well. I'm guessing that is because we got some chatter around the Middle East and around a potential deal between US and Iran, or at least that they resume peace talks. So it's tough to trade. The strait is still closed. That's the main thing. The strait is still closed, which should put overall pressure on the price of oil to the upside. So this could just be the pullback. By the way, the better thing to look at for the Middle East is going to be Brent, not US oil. So Brent should be your main focus. And Brent, I would say, is still on a path to the upside. Is still kind of following this trend line to the upside. In my personal opinion, as long as the Strait of Hormuz is closed, it will put pressure on the price of oil to go up. And that means inflation overall should keep on trickling higher. So the CPI should keep on pushing to the upside. Now the question is, at what percentage point does it become an issue for the Bank of Japan? At which point in time do they not the Bank of Japan, sorry, for the Fed? At which point in time do they say, okay, this is getting out of hand, we actually need to hike interest rates? I think above 5%, 6%, 7%, no one knows. They seem to be pretty dovish. They seem to be pretty dovish at the moment. So that's how I'm seeing the situation. I do want to mention, if you want to get the Edge Finder, okay, if you want to get the software, you can use the code Marco to get 25% off on the Edge Finder and on the A1 Trading Discord as well. So the premium Discord with all of the trade ideas, with all of the signals, and with all of the chats. Edge Finder, I use it on a daily basis. It's a game changer for retail traders. Once I started using it, my performance got drastically better. My drawdowns got much, much smaller. And if you don't believe me, do take a look at the A1 Trading Trustpilot. So whatever you're buying in the trading niche, you need to check out the reviews. You need to look at the Trustpilot. You need to look at the Discords, the experience of other traders. A1 Trading and the Edge Finder, 4.8 out of 5, 242 reviews. Read through them. It's all 5 stars. And yeah, you're going to see that people love it as well, that people use it for their trading with a lot of success. If you do want to get it, code Marco gets you 25% off. The link is in the description of the stream, or you can just type in A1 Trading Edge Finder in your browser. Okay, it's here. Okay. So I still have 4 more minutes. Rabeast, hello. Euro GBP is at a good level to take a short. Euro GBP. To be honest, I kind of haven't looked at either the euro or the British pound lately, so I can't tell you much in the case of Euro GBP. The yen has taken up a lot of my time, a lot of my focus, and it's tough for me to look at many different things. So Euro GBP, let's run it through the top setups. That should give me a more clear picture. GBP. Neutral score. So for me, that's a no-go. For me, it tells me to be more neutral as well. If I look at any outside catalysts, like I'm looking at the Fed being dovish or the Bank of Japan doing an intervention, I don't see much as far as Euro GBP. I know we had some political stuff for the British pound. So we had Comrade Keir, he stepped down. He got replaced by a new guy. The markets did love that initially. So I think we did get a rally in the pound. I think that's here. So the euro lost value against the pound, but that's old news. So essentially that has already been priced in. I don't see a lot of potential there unless we may get something else as far as the political stuff in the UK goes. So that's how I'm seeing Euro GBP at the moment. I'm not seeing a huge amount of potential, but the week has just started. It's only Monday. I'm just starting to get into it. I'm starting to do research to see where I can get an edge, what I can trade, what I can buy, what I can sell. I know the SPY is starting to recover a bit. So the SPY is going to be above the 50, the 20, and the 10. They have started to curve to the upside as well. So we could see some opportunities on buying breakouts on individual stocks. But for now, I'm being a bit more patient. I would love to see the SPY go to all-time highs. So the stock market right now seems to be flat, seems to be range-bound. We are getting the dovish Fed, which is definitely helping. We apparently are getting some good news out of the Middle East, which I don't know what to think of. Personally, I don't buy it, but let's wait and see. So could that be enough to push the SPY into all-time highs? Maybe. I think just the Fed being dovish could be enough in and of itself, because a lot of people were expecting a hawkish decision. They were expecting a signal of future rate hikes, which we did not get. Okay. Looking to trade Australia stocks. Yeah, I don't know anything about Australia stocks. Personally, as far as individual stock picking goes, I focus on the US market. And the main condition with buying individual stocks is to see the SPY on a clear uptrend and above the 50, above the 20, above the 10 EMA. Then it's game on to buy breakouts. For example, let me give you an example here. Best Buy. Here, there was a nice breakout. So you gotta push to the upside. You got a nice base building here, following the 10 EMA perfectly, and then you get the breakout on the 10th of July, big move to the upside, and then it kind of continues up. And then you can trail the stop loss. But again, the SPY was pretty flat throughout this time. That's why you didn't get an explosion up. The best market condition to be trading this strategy, buying breakouts, is here. This is bad. This is horrible. This is bad as well. Flat markets are not good. Anyway, that's it from me. You can catch me again in 2 hours during my second segment. You have James coming on right after the sort of quick video that I will play. Thank you for watching. Good luck, and I'll see you in just a couple of hours. So let me play the transition video.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. Happy Monday, ladies and gentlemen. Hope everyone's well. Hope you all enjoyed your weekends. Good to see some familiar faces in here. Ray Beast, Sluggy, 2288. Hope you're all well. So, positions wise, there's nothing new going on with me since we last spoke. I'm still in my Euro US dollar short position. Yeah, really no update here. We did see a little bit of profit. Was it Friday? Yeah, quite late into the Friday. However, since then, we did see euro dollar take a little bit of a turn to the upside. However, the technicals are still completely valid for me to be in the position. Now, there is a little bit of a nuance here, which I'll go over in a second. Excuse me. But the daily time frame here, we still have the bearish trend of the 200 and the 50 EMAs, fib from the high to the low. And we're still hanging around this fib level and showing rejection around the 200 daily moving average. So I am quite optimistic euro dollar can continue lower. And this is more based on a historical type of trade. So seasonally, euro dollar is quite bearish from sort of the end of August into the start of December. So that's one thing I'm keeping my eye on. And then on the weekly time frame, let's go over here. On the weekly time frame, I'm basically looking for, I guess, a pattern play, not necessarily a fundamental play on euro dollar at the moment. So we've got the lower high sort of trend line here that keeps coming into play on a weekly time frame. So I'm expecting euro dollar to continue to run lower over the next couple of weeks. It might not work out on this specific trade, but I will give it another go. But if this one is stopped out, then I will have to wait for a new catalyst. So the nuance or the context behind this one, or the caveat, whatever type of fancy word you want to use, euro dollar is actually getting a very bearish reading on the edge finder. So this is one of the few times where I'm actually counter trading the edge finder, and typically this doesn't work out well for me. So I would say like 8 out of 10 times, if I'm trading against the edge finder's reading, normally I will lose. Which is obvious, edge finder's fundamental. So that's kind of a given, to be honest with you. But I am willing to take an attempt here. Nasdaq, I do remain short. Now, this one actually isn't too great. Technically speaking, it is still actually very good. We came in for a retest of the previous daily level of support. The H4 is in a downtrend here. We've not managed to break and hold above the 61.8 fib level. So again, it's okay. The problem is, though, when I took this trade, it was bearish on the edge finder. I think it was only a -5 or something. It wasn't that very strong. But since then, it's dropped off, and now it's neutral on the edge finder, which is a little bit of a pain. So yeah, definitely not fantastic, but I'm, again, willing to give it an attempt and see how it goes. And the Nikkei trade. Now, as I said last week, this wasn't my position, actually. So I saw Nick sent one to his Discord. It popped to my phone. So I was like, you know what? I like it. It's the same strategy, or me and Nick trade almost the same strategy. And obviously we both use the edge finder. So I'll jump into it as well. So retest into the daily level on the entry. Of course, the entry was not necessarily held very well, almost hit the stop. But we do remain in this downtrend here on the H4. And now we're in a little bit of profit. So overall, So far, so good. And the Nikkei is getting a very bearish reading on the edge finder here of -10. So I love to see it. But something I've also been talking about on the Nikkei is just this daily trend. I am a little bit cautious that we might actually just have a little bit of a pullback and then a continuation to the upside. Basically what we saw during this period here, because this is kind of just a correction, pullback, mean reversion, whatever type of terminology you want to use. It's not overly important. But when we get deviated or too deviated from 200 moving average, like we did over here and over here, we can see we do have these types of moves where we pull back just below this 50 daily moving average and then continue to move higher. So it could be a similar situation, but of course we'll see. The fundamentals do warrant it going lower, but again, it's just that daily trend is making me a little bit nervous. And Euro CAD continues to run. This one's risk-free, but yeah, not anything to talk about on this one. It's again, it's risk-free, almost at take profit. So it just needs another little kick to the upside, and that trade will be done, which is beautiful. Right, let me see what's going on here. Jeremy, what's up, James? Not much, my friend. Just a very quiet, slow Monday for me. I'm very tired. I didn't get much sleep last night. How about you? 2288. Hello to you as well. I feel a bit bad having to call you by your numbers, but I just don't want to mispronounce your name and be rude. So I'll just stick to that one. 9545. Same thing for you. Hello, hello, my friend. Sluggy, Ray Beast, Christoph, good to see you all. Hope you're all doing well. What's my take on the NAS 100? Well, you should have just seen my take on NAS 100. I'm actually neutral, so if I wasn't already in the position, I wouldn't be looking to take a position now, just because it's not on the edge finder. The reason I'm still in and I've not closed it is because the trend is still there. The entry is still valid for the way I trade, and I do already have a relatively bearish bias on the Nasdaq, just due to the tech sector being, I think, overvalued, AI bubble, all those types of things. So as I said in my YouTube video yesterday, it might not work out. And I'm fully willing to admit that, you know, this isn't a spectacular trade. I'm not taking massive risk. It is what it is. If it doesn't work, it doesn't work. But I will take these short opportunities when they come, and yeah, take the attempts. Because the thing is, you know, anyone that's been watching my segments for, you know, the past, well, basically since the start of the year, you will know I've been talking quite a lot about the AI concern I've got. I'm not overly satisfied with the idea that I want to be, you know, continuously buying these markets. I'd actually rather take some short positions. So what I don't want to do is say all of these things, not doing anything about it, and then one day it might come. It might be 5 years down the line, you know. But I've not taken action on my own idea, and then I've missed it. Do you know what I mean? So I am going to take these attempts again. They might not work, but I'm willing to put some money on the idea. Hi James, working on a model to trade Australian stocks, also studying and researching industry in Australia. Very nice, Ray Beast. Every time we talk, I swear, maybe once or twice a week, you tell me you're working on a new model. How many models do you have? You must have hundreds at this point. Every time, you know, seasonal model last week, I think you were talking about. Crazy. Sluggy, have I missed something here? Yeah, I mean, last week CPI did beat on Euro on core 2. Yeah, the Euro's been doing quite well. Well, James, I remember you were watching short Nikkei before, Nick. Yeah, that's the other thing. Yeah, I was watching the Nikkei. Nick was more of like a trading view alert. It was good to see Nick in it. You know, it's a fantastic confluence, TraderNick confluence. But yeah, it was more effective. Yeah, we were looking at it. Nick sent the signal. I was like, you know, I'll jump in because I was in bed at the time. Time zone difference. Nice seeing you guys again. Nice to see you as well. So 2 trades. Maybe I got that right. Am I bullish on gold? Yeah, we can have a look at gold in a second. It's fine, James. Until I get addressed, it's fine. Is AI against gold? I'm not sure what that question really means. Do you mean, is the AI boom negative for gold or what? I'm not sure exactly what you mean by that. Quiet market, still short euro dollar. Fantastic. Yeah, we can take a look at gold then. Seems to be a bit of a demand for that one. Okay. Bitcoin. Yeah, we could add Bitcoin to the list. I'm not on for an hour today. I need to remember that because otherwise I'm going to sit here and talk for the next half an hour and not do anything. So I'll read the chat on the next message and then we'll move on. James, the work I work on multiple models, but only a few past the testing stage. I see. Okay, that makes sense. Fair enough. So with gold, I am still in my long positions, but I don't know where my drawings have gone. So my long position is still active. There was one around 4,000 and another one roughly around 4,080. Not exact numbers, again, roughly around those two levels. And then I've got pending orders down from 4,000 at every $100 increment. So yes, I am still long on gold, but it's a longer term investment style approach. It's not a swing trade. So when I say I'm long gold, that doesn't mean that I think gold is bullish right now. It means I think gold is bullish over the long term. And I want to see the short term downside so then I can accumulate gold on a discount. Does that make sense? So I'm executing my bearish bias with a longer term bullish view. Hopefully you understand what that means. So on gold, I don't see anything really to drive gold at the minute. Actually, having said that, I've just realized gold is on the edge finder with a bullish reading of 5, which is good. I mean, gold has been getting hammered this year so far. I mean, the charts say that the edge finder score was pretty bearish on gold. I can't remember the exact score, but for the majority of this year, basically since I think February, gold has not been doing fantastically well in terms of the edge finder readings. So the fact it's now bullish is a good sign. The dollar seems to be in a little bit of trouble as well at the moment. So something I am paying attention to this week is the US data. So we do have NFP, we've got JOLTS, we've got unemployment, got PMIs as well, I think, this week. I can't remember off the top of my head exactly what we've got on which days, but I know we do have a lot of US news coming out this week, which will be quite telling. So it's really a case of what does that news tell us about the US? Are we going to see the labor market continue to weaken and the dollar continue to weaken on a fundamental basis? Or are we going to see the labor market picking up? I don't think we will. That's more of a hunch. I can't give you a real reason why I think that. I just don't think we are really going to get great data up to the US this week. So if that is the case, we could very easily see the dollar back inside this year-long range that we actually broke out of. And this could just be, false breakout, and everyone got excited for no reason. PMIs today, that is right. Yes, you are correct. Thank you for the reminder. So yeah, that's sort of bearish case. Bullish case, if we do get positive labor data and we see the de-escalations in the Middle East fall through, we could very easily see the dollar catch a bid again. And that again will be back on the back of the positive labor data and maybe the positive PMIs and higher oil prices, higher inflation, higher yields. So we'll see. So I don't really have much of a direction on the dollar. I think it's, very much a case of we've got to just wait and see, or at least I do. That's just the way I approach the markets. In this case, I just don't have a clear view. I don't feel confident enough to take a real stance on the dollar. So yeah, that's another reason I'm long gold and short euro dollar, because then I'm kind of positioned both sides. Sorry guys, give me a second. There's a bit of a chatter about the stream times. Just want to make sure I'm not going to do anything silly here. For today and tomorrow when I look schedule on Friday. Okay, I think it's fine. I don't think anything's changed in my part. Right. So, we're talking about gold. Sorry, I completely got sidetracked there. So gold, in terms of actually looking for a trade, I don't think there's much I can do here. So the real issue isn't just the fact that not necessarily the edge finder is bullish. That's not an issue at all. But first of all, the fact that I don't really have a clear reading on the dollar. Yes, it is fundamentally bearish. Again, the edge finder does tell us that. But I would rather just have a little bit of a waiting period and just have a more solidified idea. Because at the moment, I think it's just a little bit of a seesaw with the dollar. Now, regarding gold itself, this is an issue on its own. The fact that we are just sideways, we're holding above 4,000, but we're failing to break above 4,200. So for me to get a bias on a technical view only, I'd need to see if a break below this 4,000 level, retest and continuation lower, or I would need to see a break above 4,200, retesting some sort of previous highs, whether it's here or here, either one, and then a continuation higher from that point. Basically a breakout approach. So with the dollar, I've got no clear view, and with gold, we're just sat sideways. So yeah, I mean, that's really all I've got for you. And then again, we could layer on the edge finder data and say, gold is bullish. So if we were looking at purely a bullish case, then yeah, that second option would have to be really the play, where we wait for some sort of break of the previous highs and then retest and continuation, along with these moving averages crossing over. So that's all I've got for you on gold. Okay. Right. So something else I'm very excited about actually this week, or well, whenever, it could be this week, next week, I'm not sure, but a potential entry short on Aussie New Zealand. So anyone that's been watching my segments for, probably the start of this year, maybe even sooner, you will know that probably 1 or 2 months ago, I was quite short on the Australian dollar New Zealand looking for a mean reversion play. So I was short kind of around here, let's say 1.22, roughly around that area. So it was quite a good position in hindsight, but at the time it was just range bound, and it kept going into profit. Then it came back to break even, then it was in profit, and then back to break even, and it's a negative swap trade. Or actually, I should say positive swap for buyers, negative swap for sellers. So I was losing money on that whole trade, or that whole duration of just nothing happening. So it just wasn't worth holding, because I just wasn't that comfortable with the idea at the time, again, after the fluctuations with price. Now we've had that change, and we've obviously broken out, or the first time we've broken out of this range since it was established, kind of since 2014. It does really depend where you draw it. If we go right back to sort of here, 2014, give or take. So there is kind of what I'm looking at here, the mean reversion approach, where we could revisit the high of the range, or even back into the range. So if we could get the entry that I'm looking at here on the H4, and everything goes smoothly, we don't get taken out, we don't have to adjust the stop or anything like that, and we can just let the trade run. And again, this is talking in a perfect world if everything works out. And we do get sort of TP1, if you will, which would be the high of the range. Let's be a 1 to 9.9. So the risk reward is fantastic. I'm more than happy to take the risk on this trade. Now, we've also got Aussie New Zealand reading bearish on the Edge Finder. So we've got the H4 trend bearish. We've got the Edge Finder very bearish. We've got higher timeframes that could be due for a mean reversion. Although they are in bullish trends, that doesn't mean a whole lot when obviously the fundamentals are flipping. Lower timeframes will flip first. So this is, I would say, my most optimistic setup at the moment. I think this would be, how do I explain this properly? So I don't know if you guys have this, because I know traders obviously approach markets in different ways. You will have trades where you can just take a trade, your average day-to-day trade. In my case, that is just, break, retest, fib, pullback, bullish trend, whatever. But then you get trades like this where you've got such a fantastic R&R potential, and everything is lining up, or even already aligned. It's just one of those trades that, will go in your history books of trades. And a good example of that was, the pound Australian trade that I had earlier this year. I keep going on about that, but again, that was kind of the only trade I've had this year that was really great. So there is that. Other than that, I don't really have too much. Euro Swiss looked okay. We do have pound Swiss, Euro Swiss reading bullish on the Edge Finder. We've got the daily bullish trend here that's just been established with the 250 moving averages. We broke above the daily resistance here. We've come back down and retested the fib. Now, I missed the entry, and this is the sad part. So I should have been entered down here. If I was paying attention and following my rules, this would have been the trade that I was already in. Problem is, I wasn't paying attention, and I missed the entry. So now I'm just sat on the sidelines. So I'm considering getting into a position on Euro Swiss on the next pullback. But the real question is are we going to get a pullback before we end up breaking this high? And if we do, does that actually just mean we created a lower high and the market trend is continuing lower? So I'm really debating if it's worth me actually really trying to get back into this market, or get into the market, since I've already missed the entry. New Zealand US dollar also does look really good on a technical side. And this actually will be quite a good hedge for my euro dollar short position, because we've got the H4 trend here that's bullish. We've got the low, we've got the high, fib pullback here into kind of previous resistance and support. No, it's not perfect, but the idea is there. And then a continuation higher. Now, as I said, the Edge Finder does have New Zealand US dollar very bullish with a score of 9. Fundamentals are there, trends there, technical entry is there. One of the things I am paying attention to, though, is this weekly time frame on New Zealand US dollar, where we've got the just persistent downtrend. I really do not like the look of this. So if I was to get in the long position, I wouldn't be holding it. It wouldn't be a case of trailing stops like I do on normally most positions, I very likely would cut it probably around the top of this trend line. Obviously, it depends on the exact context at the time, depends how the economy's doing, what the edge finders say, and so on and so on. Based on just the technicals, though, this is currently the plan. So yeah, that's kind of all I've got for you. You know, we've got some other markets. Pound Swiss, basically the same as Euro Swiss, actually slightly cleaner. A bit of a nicer daily resistance here. The pullback would make a little bit more sense. We've got a really nice established daily trend that's just formed. So yeah, exactly the same as Euro Swiss, just a better technical lineup. Aussie US dollar. Yeah, I was looking at Aussie US dollar from potential long, but I don't like it because if we go back to the edge finder, we've got better opportunities. So the opportunity cost of taking Australian US dollar, I think is just too high. So, you know, we've got Aussie US dollar down here, bullish score of 5, but then we've got other opportunities. You know, we've got Euro dollar, New Zealand US dollar, pound US dollar. So why would I go with Australian US dollar when I could go for something that's got a larger fundamental drive to the upside? So I'm probably just going to ignore this one. Maybe, you know, unless the fundamentals change. And then that brings us kind of full circle to pound dollar. So this one is, again, very, very simple. Previous structure on the left here, kind of established this bullish trend. It's a little bit choppy, but we have crossed. So pull back into the fib zone, retest previous structure, and continue higher. This one does follow a very similar pattern, though, as New Zealand US dollar, where we've got the weekly sort of downtrend, and then we've got the higher sort of a longer term sort of uptrend here on this weekly time frame. Now, I don't really use trend lines, but I have started drawing them a lot more on my charts. I just think they look quite nice. I quite enjoy having them on the chart, but I don't really trade trend lines. But it is something I think is quite relevant, especially on higher time frames like the weekly, monthly, maybe even the daily. So, I mean, actually, this is a good example. You can see we actually came up to this trend line and we having a bit of rejection, although I'm not an advocate for trend lines necessarily. So don't worry. James, New Zealand dollar is also a big, it's also a solid long setup if data beats. Yeah, absolutely. Same zone. Very good, Sluggy. Great minds think alike, as they say. Is there strong news today, guys? Yeah, it's PMI. I'm not sure which PMI. Is it manufacturing today? I think we've got manufacturing today and then services Wednesday. I might be mistaken again. I can't remember off the top of my head. But yeah, we've got US news today. AUD USD might be a good one, though. From 0.7, you can see some strength. Yeah, Max, I don't disagree. I'm not saying I definitely don't think this is a bearish market. I do think the base case is still upside. But as I said, I just think there are better opportunities. So I mean, the edge finder saying it, these scores are higher on euro dollar, New Zealand US dollar, pound dollar. So why would I go for a market with a lower score? It just doesn't make sense when I say it as simply as that. So yeah, it might be worth an attempt, but not for me personally. US dollar and CAD news Friday going to be volatile. Indeed, it will. UK oil. So we want to look at Brent. I mean, oil across the board is not doing great, actually. Although we do have some gaps, actually. I would expect oil to still come and fill these gaps at some point. That's just kind of the way the markets work. They fill gaps. I mean, you can see the one down here when we actually had the first escalation in the Middle East. We had the gap to the upside, and then we came and corrected it and continued higher. I know it's not the driving force of the market, but it just happens. You know what I mean? It's just a mechanism or something, whatever type of wording is correct to use there. Okay, so with oil, I do not really want to get involved with oil. I do agree with Marco. I know when Marco was leaving the stream, he said something about not trusting it or something along those lines. It's just too messy with the headlines. It's a case of, we've had how many escalations, de-escalations at this point? It's not a situation I'm even going to attempt to deal with. I'm going to avoid that as much as possible. Of course, you can't fully avoid it unless you just don't trade, but I'm not going to get involved by directly trading oil. Because I think we're seeing a little bit of a theme here. For me, I think it's quite a clear one where we're getting high oil prices, oil is pushing higher. Then we get de-escalations by the US. Oil continues higher on the re-escalation. But why would that happen? Well, obviously Trump doesn't want high inflation and high oil prices. That's not a good look for him. I also, and this is purely me sort of speculating, I've got no factual data for this, but I also don't think that Trump really wants to have a peace deal. I don't think maybe from an ego side, I really don't know. I don't know how his brain works, but I just don't get the feeling he wants necessarily to have a peace deal, but he also does want lower oil prices and lower inflation. So the way he's dealing with it is by having oil prices drop on the de-escalations. And then once they've dropped his satisfaction, then we get a re-escalation to continue. That might be the case, or I could be completely wrong. But it doesn't really matter whether that is true or not, because oil will do what oil does. Several pairs on the edge find a yen bearish. How do we get in after that intervention? Okay, so with the intervention, I've got 5 minutes left, so I'll try and cover this pretty quickly. So with the yen, I just don't care. And I don't mean that in terms of I don't care about your question. I mean, I don't care about the intervention. It was a little bit of a concern that the US got involved. I think it was it the New York Fed or something that ended up doing a intervention right after the MOF. Now, it doesn't change anything. You know, we've been talking about this for the past couple of weeks, really, but an intervention is just a temporary thing. You know, there's no interest rate change. The yield gap is still there. The carry trade is still in play. There is just nothing to keep this market going down. This is, in my opinion, and this isn't financial advice, this is just the way I view it. This is just another opportunity to buy dollar yen at a good price and continue this carry trade higher. And I would expect that's how the rest of the market views it. So that's my thought process. If you have, and I can't say that. I personally wouldn't mind sort of DCAing in at a very small price. A very small size. So you can see I was actually planning to do that. So, you know, I don't know what small size to you is. Let's just keep it easy, one lot, keep it simple. Assuming one lot isn't a huge amount of risk for you, you could just go in one lot every, you know, certain amount of increments and just DCA the way through it. And eventually, you know, expect that carry trade to prevail. Of course, that idea would break if we do get the Bank of Japan start to hike rates, but I don't think they will at the moment. So, yeah. That's currently my view. I just don't think it's that meaningful. I just think it's a pretty good discount, really. It's getting tricky to trade after a yen intervention. I would say give the market time to digest. Especially if the US Gov is not done buying yen. Yeah, but the thing is, Max, they could intervene again. Of course, that's always a risk. But as I said, the point still stands. Nothing's changed. The whole landscape behind dollar yen's rally to the upside or trend to the upside is still there. You know, so I don't really see it as a big deal. Of course, if you're in bad positions, you're oversizing and you've got tight stops, and yes, obviously you're going to get a little bit. You're very likely to just get stopped out. But if you're trading it sensibly, I think it is a good opportunity, really. So let me just double check who's on after me. Hold on. I don't know. Is there any A1 people in the Discord or in the stream? I'm a little bit confused because normally my segments are an hour. So normally I come on for an hour. It says here 12 till 12:30, so half an hour slot today, but then Alan doesn't come on till 1. So I'm going to assume I am on for an hour. It's me. Tiger, are you on in 2 minutes then? I'm so confused. Oh, it's Monday. It's okay. Give me a break. I'm doing my best. Yeah, you're on. Okay, thanks, Tiger. I appreciate it. Okay, so it is a half an hour segment today. Thoughts on gold? They know they can't beat the market. The intervention already cost them a lot. Yeah, absolutely. Interventions are not cheap, by the way, guys. I mean, there was 8.9 billion or something yen, by the way, not dollars, but it was billions of yen that they spent on the intervention that they did on Friday. So, it's not something they can just continue to do. So it's not dollar yen's going up, we need to intervene. It's a case. It's kind of like a last resort. Imagine you were bleeding out and you went to the hospital. The best thing you can do is try and patch it up, but that's not going to heal the problem. It can maybe give you an extra bit of time. That was a bit of a morbid example, but it's the first one that came to my head. I'm not sure what that says about me, but it's all right. Anyway, ladies and gentlemen, I'm going to head off. It seems like Trade Like a Tiger is ready to take over the show. Guys, have a fantastic rest of your days. I'll see you all tomorrow. Don't go anywhere. We've got Tiger coming to take over. Stay safe and don't get margin called. See you later. Hello. Somehow I came back. I don't know how that's happened. Okay, hold on. I was very unprepared for that. Hold on. Let me just go on Do Not Disturb here. There we go. Can you guys hear me? Everything good? I de-set up my whole setup, so I'm not sure if everything's all right. So I'm waiting for my screen to show. Hold on me. There we go. Sorry guys about this. Okay, right. I think I am on for an hour. That was a big mix-up on our part. So I do apologize on behalf of everyone. But all good, all good. Okay, I'm just waiting for someone to allow my screen. There we go. There we go. Milo's on the screen. So I guess we'll pick up. I guess we'll pick up from where we were. Let me reopen the Edge Finder. Okay, right. Just bear with me. That really threw me off. Okay, here we go. Yoga silent time. Yeah, I suppose we all had a bit of time to have some deep thoughts and think about all the actions we've done today. Anyway, right, let's get back to business. So what were we talking about? We were talking about the yen. However, obviously, I kind of cut that short because I thought I was running out of time, but I guess I'm on for another 20 minutes or so now. Someone say yoga. Bit of yoga, always fun. I suppose, I mean, I kind of speed ran through all of my points because again, I thought I was on for half an hour, not an hour today. So I've covered everything I kind of wanted to already, but I guess we could do a bit more of a deeper look at things. If there's any requests or anything you want me to re-go over, anything like that. Solid trading climate breakdown. Stay tuned for more. Yeah, I mean, definitely not the proudest moment, to say that for least. Okay, so euro dollar. I don't think there's much to really go over again. This was a very, very simple price action trade, really. Nasdaq, I think, does still have potential, but if we are going to see the Fed take a bit more of a dovish lean, we could just see this trade completely get blown out of the water. However, the fact that we've not followed through to the upside is quite convincing for me to continue short. The fact that we haven't actually closed above the daily support really is also a pretty good sign. I think we had a bit of a gap up, but we've not had a true close above yet. So the only real downside here for me is the daily time frame still being bullish, which of course isn't great. But I do think that the next real support level is, well, yeah, either the daily 200 moving average or the previous all-time highs we've got around 26,000. So as long as we can just continue lower, I can trail stops pretty quickly and just let the trade go. It doesn't really matter where it stops because either, you know, maybe I get out of the 200 moving average, maybe it continues lower and I actually catch a fantastic trade. So this is absolutely more of just a wait and see, you know, just let it play out. The Nikkei is doing quite well. I know we've already covered these markets, but I'm trying to just get back in the flow because again, you know, it's when I go off stream, it's like my brain just melts for 5 minutes, and I kind of just relax. So I was in the middle of doing that, and then I'm back again. So anyway, the Nikkei, yeah, is moving in profit. It's moving quite nicely. The Edge Finder is bearish, as we've already discussed. So just as the Nasdaq, it's more a case of just letting this one run and just seeing what happens. I don't have a take profit on this. So again, it's more a case really of it could continue to run. We could get a much larger retracement on, you know, AI concerns, tech concerns, valuations, things like that. But the problem is, I'm not, as I said earlier, this isn't a trade really to express that. It's more just a little confluence. If that, you know, we do start seeing cracks in those areas, at least I'm already in a short position. But this one specifically is more just a technical play along with the Edge Finder confirmation. Right. So, pound dollar. I wouldn't mind getting into pound dollar because the Edge Finder is bullish. It would offset a little bit of my risk on euro dollar as well. However, it's not looking fantastic, to be fair, because we do have a lower high that's formed. The moving averages are a little bit squiggly wiggly. You know, they're a little bit sideways here. Not a truly defined trend. So it's not looking fantastic. It's a little bit of an iffy one, in my opinion. I would take it, but I don't have much hopes for it, to be honest. I went long oil with tight stop loss. Jeremy, let's take another look at oil. Yeah, I suppose a little bit of a support level through here. Yeah, I mean, I think the problem is really you could do all types of fancy technicals with oil. You know, you could do Elliott waves, you could do cup and handles, whatever type of crazy things there is out there. But it doesn't matter because, you know, obviously it's headline driven right now. So it's a case really of just waiting to see, does a headline come out that's positive for oil or negative? And that's what you're subjected to. So I think obviously you could use the technicals as a little bit of a confluence for an entry, but generally speaking, I wouldn't say it's for me, of course, it's just not something I'm even paying any attention to. In terms of taking a trade, of course, I am watching oil as always. Time to buy Nasdaq. What makes you say that? I'm curious. I'm not saying you're wrong, of course, but yeah, I would like to know why. On 58K, I'll look to exit if EF is no longer bearish then. On the Nikkei, I assume you're talking about, let's see. 58, where is 58? Here? Yeah, I think that would be decent. So for me, that would be, yeah, like a 1 to 2.5, yeah, 1 to 2.5 roughly. So not too bad. Happy Monday. Yoshi, happy Monday to you as well. Nasdaq going up, I am buying. That's a fantastic analysis. The market's going up, I'm buying. But why? What's the reason for the long position? Gaps for a little go. Jeremy, you're playing a gap trade. I like it. Yeah, I do like the idea of trading gaps. I don't really do it in oil, again, just because it's too headline driven right now. I do like to trade gaps in FX markets, though, just because they typically get filled pretty quickly. I don't do it often. It's like a twice a year thing. It's like, you know, if I'm up at the time the markets are open, there's a gap, I might take a trade. But it's very rare. But I do quite like doing it. Just got my answer. Cheers, James. No problem at all. Yes, it's a buy for Nasdaq. Fair enough. Would you enter DCA longs on GBPJPY or USDJPY? That's a good question. So I would lean to GBPJPY right now. And the reason is because if we go to, what is it I want to look at here? Heat maps. No, wait, macro scanners. No, that's not what I'm looking for. I can't remember what I was looking for here. Anyway, we'll keep it simple. You don't need it. So the power, well, the weight here is dollar yen or pound yen. So obviously yen is the common component there. So it's really a question of, do we want to buy the dollar or do we want to buy the pound? So in that case, the answer is very simple here. So we've clearly got the pound bullish, we've got pound US dollar, pound Australian dollar, pound yen, pound Swiss, pound CAD, all bullish readings. But then we look at the dollar, and again, pound US dollar sold, New Zealand US dollar getting sold, euro US dollar negative for the dollar. We're seeing dollar bearish data for, well, bearish data for the dollar on the edge finder. So the answer by default goes to pound yen. Now you could also look at another aspect, which is the swaps, but here the swaps isn't a huge deal actually, and I'll show you why. Hold on. GBJPY. So the interest rate divergence is 3%. So we're getting paid long positions on pound yen. And then we check dollar yen. Oh, hold on. And what do we see? 3%. And the reason is because the Fed and the Bank of England both have the same interest rate right now. So when it comes to the carry trade idea, it doesn't matter because we get the same swaps on both markets. So all it comes down to is, as I said, the fundamental side where we've got to weigh the dollar versus the pound. The pound comes out on top in this case. So pound yen, I would say, is a clear choice over dollar yen at the moment. James, you got a bag holder? What do you mean? I'm not sure what a bag holder means. Nasdaq, the war is wrapped up. No escalation, no interest rates going up till next time. But how many times we heard it's over? I'm not going to trust that headline until it's absolutely solidified. And I think the markets are actually kind of doing the same, thinking the same thing. You know, Nasdaq, we've had positive developments in theory, but it's really not done anything. We had a very, very tiny gap on the open, but yeah, absolutely nothing. What has me worried is everyone's short Nikkei, including myself. Trade still makes sense, but sentiment has me worried. Don't worry about sentiment. I think it's easy to take that idea because we all trade the same thing. So, you know, if you're in the stream, I would assume that you either have the edge finder or you trade fundamentals in some type of way, or you're a trend follower, you trade pullbacks. You know, there's obviously different varieties, but it's all the same basket of things. It's all the same kind of approach. And that's why we're all here. But because that's the case, we are all generally going to be on the same ideas or same directions of the same assets normally. Not everyone, of course, but a lot of us will be. So you've then got to think about what retail sentiment is. Retail sentiment includes everyone. So it's not people like us that are trading fundamentals, generally speaking, because that's not the majority of retail traders. The majority of retail traders are using just technicals, you know, support, resistance, order blocks, FVGs, so on and so on. And they're not in the same basket as us. In terms of the way they trade just has nothing that is even applicable to what we do. So I wouldn't worry about that type of idea. Bag holder equals exit liquidity. Oh, right. Okay. Yeah, you're right, Sluggy. I do. I don't see an issue in being short here. The important part is stay short. Stay short when it's have to move down. Yeah. No, I agree with that, Max. I think that's a good point. I didn't explain it well enough. Not just EF users, even in communities that don't use it, people are leaning bearish on the Nikkei. Okay. Well, I'm not in it. And the only community I've got is really you guys. So I've got no idea, but it doesn't bother me at all. You know, if the fundamentals are going one way, the market generally will go that way. I think, yeah, retail sentiment's interesting, but it's not something that I really care too much about. USD JPY interest in longs. Yeah, I think there's definitely arguments to be made to be long on the yen pairs, dollar yen, pound yen, Swiss yen, CAD yen, so on and so on. I get the idea. I do actually agree with it. You know, we've got the carry trade that's intact. We still don't have interest rates by the BOJ. So, you know, what's really stopping it? Because if you think about it, if you were buying dollar yen up here, you know, nothing has changed here. There is nothing that's changed. The only difference is that you've now got a better price. Of course, I'm simplifying it. We did have interventions, of course. We had the Fed that wasn't as hawkish as people maybe thought they would be. But generally speaking, nothing's changed in the core aspect. You know, the interest rate divergence is still there. The carry trade's intact. So, yeah, I absolutely do think dollar yen will continue higher. But my main question really with dollar yen is, are we going to see this 164 level act as the new 160 level? So if we draw 160 on the chart here, you'll see that it was a resistance for quite a while. Actually, I'll need to extend it. So around here. So what I don't want to do is, you know, buy the low here, hold the position, it gets to 160, 164, and they intervene again, and it just comes all the way back down. So I would very likely have to have quite a tight trailing stop here just to protect from that potential outcome. So it could be a case of, yeah, we see a repeat of what we saw over here at the 160 level. So that's my only real concern. In terms of direction, I'm still very bullish on dollar yen. You guys are probably right overall. I do lean bearish at the end of the day as well. Hence why I'm short. Was just something I noticed. Yeah. Yeah, I think retail sentiment's definitely an interesting one to look at. But I just don't find it very reliable. No, sorry, not reliable isn't the right word. I just don't find it very relevant, you know? Because when we're looking at things like interest rates, inflation, growth, all these different complex things that actually do move price, retail traders being, you know, 60% long or 60% short, that's not going to overwrite the fundamentals. It doesn't change anything for me. It could be a good little signal, maybe, but again, it's just not something that I put much weight on. Economics are screaming rate hikes in Japan, but for political reasons, they're not hiking. Yeah, there is actually, you know what? Because I'm here, let me show you guys something, actually. This isn't I wasn't actually going to put this on stream just because it's a really it would take a lot of explaining, because I was going to do it in a YouTube video, but I'm too tired today to do a YouTube video. But this is something I was going to do, and it goes on CCEY17's point about Japan can't just hike rates. So if you look at a lot of the retail narratives we saw on Friday, you know, I mean, I don't know about you, but I saw a lot of people say, oh, they need to hike rates. That's just the maths. They have to hike rates. It's not as simple as that. And again, I'm not going to read all this out because otherwise I'll be sat here forever. But Japan isn't in a situation where they can hike rates. There's too much of a push and pull. So Japan's gross government debt is approximately 250% of their GDP. So think of it as a mortgage. So when you are paying your debt at, let's say, 0% interest rate or 1% interest rate, which is what the BOJ's rate is, it's manageable. You can afford to pay that, or at least I hope you could afford to pay that. But if those interest rates start going up and going up and going up, how long can you afford to pay those debts? So that's only one thing. But again, something that is not quite as simple as Japan just hike rates, because it's not a simple approach. There's a lot of components that can go wrong. So there's two policy paths the BOJ can take. They can raise rates, so increase the Japanese interest rates. That will decrease the yield gap between the US and Japan, or the dollar and the yen. The carry trade will become less attractive, so we'll see dollar yen down quite significantly. That means the yen strengthens. But the Japanese government bond yields will rise, bond prices fall, future debt service costs will increase, bankers, insurers, and borrowers will face pressure. It supports the yen, but it pressures the bonds and economies. They could take the other path, which is not hiking rates, and this will support the JGBs. So the Bank of Japan slows its purchase reductions or buys more JGBs. Bond prices stabilize, long-term yields remain lower, government financing pressure eases, but the US and Japan rate gap remains wide, and possibly even wider if the Fed does hike rates like the market's expecting. The carry trade will remain attractive. Dollar yen will continue to climb higher. The yen will weaken, and imported inflation rises. So it supports the bond market, but remains a pressure on the yen. So that's kind of the situation. I'm keeping it very simple because I don't have time to go through all of the components in detail, but you can't sit there and say, oh, well, the yen's weak, the BOJ needs to hike rates, because it goes deeper than that. One thing the Bank of Japan could do is hike by surprise. That doesn't do anything sluggy. Hiking, whether they make a hike public or not, these problems are still going to be there. So I'll leave. I don't know if you guys can see this. Obviously, I don't know what the quality stream is for you guys to see, but yeah, there's a lot of sort of caveats and things really behind the simple rate hike. Anyway, we'll leave that there. Maybe we could do a bit more of an extended version tomorrow. I think I'm on for an hour again tomorrow. Maybe I've got a bit more time there to really run through things with you, but I just wanted to show that because I think it fit with what we were talking about. So what do we want to look at in the last 5 minutes or so? Bitcoin, let me go to the weekly. Let's see what Bitcoin's doing. Doesn't seem to be doing anything, actually. It does seem slightly more pressure to the downside on the weekly. We have seen an attempt here by the bulls to come a little bit higher. We just have not seen any follow through to the upside. It seems like we are actually now using these moving averages more as a resistance rather than a dynamic support like we typically would see. I mean, you can see the same thing here. Dynamic support, really nice upside movements. Then we enter this bearish market where we actually use the 50 moving average on the weekly as resistance. We fail to break above here. We attempt to use the 200 as support. And here we, again, fail to break above the 200. So I think the sentiment in the market for Bitcoin is very clear. But it's really a case of how much further does it have to go? Because, someone last week raised a good point that I didn't actually think about, because what I've been doing is looking at Bitcoin's previous crashes, here like 83% or 84% down, here around 57% down. This was about 80% down. And obviously the market cap of Bitcoin has significantly increased since these periods here. So is it actually a case of people are expecting Bitcoin to have, this 60, 70, 80% crash, but is that actually going to happen? Maybe, maybe not, of course. We'll see. I don't trade Bitcoin, so I'm not here to try and call any specific levels or anything. But with the way things are going, the way that price action is developing, I think if this level was going to hold and really bring in meaningful buyers, I think it would have done it by now. So it wouldn't really be a huge shock to me if we do see 50 to 40K. Oh, and Sluggy just said 50, 40K as well. So yeah, I think me and Sluggy seem to be on a bit of a similar page here. So that is, if I had to say, if someone put a gun to my head and said, where's Bitcoin going? I think I would have to say 50K. But again, I don't trade Bitcoin, so my knowledge on this market is quite limited. I'm just going purely off price action at the minute. Nice analysis. Thank you very much. I do my best. Sluggy, you're short Bitcoin. Very nice. No Aussie New Zealand. We did do Aussie New Zealand earlier. And I was saying it's my favorite setup at the moment, or potential setup if I can get in. So what we were looking at was the weekly. Oh, wait, hold on. Wrong time frame here. The weekly level of previous support over here, now being used as resistance, looks fantastic. We're broken out of this 12-year range, give or take, for the first time. And this was on the back of the RBA, hawkish, hiked 3 times, then went on pause. The New Zealand dollar is now looking a little bit more attractive. And, just on a technical side, this is an extremely aggressive type of movement that often does see some sort of correction. So I wouldn't mind looking for a short position back into at least the high of the range, maybe even back into the middle of the range. And the way I'm looking to actually execute that is on the H4. So as always, fib from the high to the low, looking for a 50% pullback or some sort of fib pullback. We've got the bearish trend established on the H4 as well. So this is what I'm looking for. As you can see, if this did work out in a perfect world, this could be potentially a 1 to 9, 1 to 10 type trade in terms of R&R. So the idea is definitely there. And we do, to put the cherry on the cake, or the ice cream, or whatever the saying is, we do have Aussie New Zealand here, very bearish with a score of -8. So yeah, Aussie New Zealand, absolutely fantastic trade idea, but it's just a case of waiting for an entry. What about Nikkei shorts? I'm already short Nikkei. So yeah, very simple stuff. I've got about 3 minutes left, so I will actually leave for good this time. When I say leave for good, I don't mean that forever, just for today. Don't worry, I'll be back tomorrow. My model caught Bitcoin short last week. Very good. Yeah. Okay. So Nikkei shorts, again, very, very simple stuff. Nikkei's bearish on the edge finder with a score of -10. I entered initially on the fib here. So fib from the high to the low as always, pulled back into this daily level of support. We didn't actually see a rejection. Normally I do wait for a rejection off fib levels, but I didn't do it in this case because I actually followed Nick because I was in bed. So this trade actually didn't start out too well. I was almost stopped out on the position, but the H4 here is still in a bearish trend, looks fantastic. And since this point, we have continued to run lower, staying true to the edge finder's bearish reading, which is great. So I would expect this to just continue down to the downside. I don't really have any other expectation. The only thing that I've been talking about on the Nikkei is just the daily 200 moving average is a little bit of a red flag for me. Doesn't mean I'm going to close the trade here. Doesn't really mean anything, but it is something I'm just paying attention to as the market comes lower towards it. So yeah, that's that. Simo, good to see you, my friend. Been good, thank you. How about you? Did you have a good weekend? Right. Okay, so that's pretty much all the trades I'm in. We've gone over the Nasdaq, we've gone over Eurodollar, we've gone over the Nikkei, we've gone over Aussie New Zealand. Yeah, Euro Swiss, I do like it, but as I said earlier, I just think I've missed the entry. I really should have been a buyer down here. I wasn't paying attention, so I've missed the entry, unfortunately. Yeah, I like the idea, but there's just nothing for me at the moment. New Zealand US dollar maybe could be a long position if we can revisit this fib level. Pound Swiss could also be a pretty good long position here. We've broken out of these daily highs on the left. So break, we'll look for the retest into these highs, into the fib, and then a continuation higher. So yeah, simple stuff. But the thing, I'm not sure if I mentioned it earlier, but Pound Swiss, I'm just paying attention on the week. Well, sorry, if I get into a position, something I'm going to watch is this weekly 200 moving average, because as we can see previously, this has acted as a dynamic support and we are in this overall bearish weekly trend. So I don't want to be a buyer forever. This wouldn't be a trade where I hold or I just trail stops forever and try and hold it for as long as possible. Very likely I will just get out as soon as we touch this 200 or get near the 200 and then maybe pivot actually into a short position. I quite like it. But again, it's more just a case of waiting because this is a weekly time frame. So it might not play out for, another 1, 2, 3 months maybe. Second look for New Zealand US dollar. Maybe. Yeah, you know what? I think I'm just thinking now. I've looked at it again. I'm just thinking, are we actually just going to reject this level of previous resistance? Because we came down. We've shown two rejections now. This might just be a missed entry for me. We'll see. But yeah, I'm a little bit worried about that one. No, sorry, not worried. Worried is not the right word. But curious, cautious, whatever. Pound dollar, same thing. Could be quite a nice buy, but a little bit worried about the downtrend we've got here on the higher time frames. So yeah, that's me, guys. I'm actually going to go now. So enjoy your days. I've got no idea who's on next. I'm going to assume it's Alan because Alan is always on after. I can see him typing in the Discord. So guys, stay safe. Don't get margin called. Thank you for being here. See you all tomorrow. Enjoy the rest of your days. Yeah, see you later.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. How you guys doing? Hope you guys had a great weekend. Lots of stuff happening. We had a quick flash of intervention on Friday, like the hour going into the close. Then you had a little bit of a crash going into Monday or Sunday night. And now we have other things going on. We got oil. We got lots of things moving in a certain direction, which is really, really cool. James, great job there on the segment, man. Thanks for powering through. My bad. I was there 3 minutes late to get you on the stage, but it was great. I was listening to your whole segment. I love it. Kier, good morning. Rev, hope you guys all had a great weekend, a fun one, and I hope you guys are ready for this week because it seems like we got lots of movement. So let's talk about the first one, which is oil, right? So oil's down 8% today. Way below or meaningfully below that $85 level of support here. This was a big level for me that I was watching personally because it kind of could went either way. And I really didn't know what was going to happen. So this level here, let me put it's not working. Well, this level here, $85 mark, was support here when the war was going on. We had selling pressure in June, a pullback, and this could have been a pullback to continue higher, or this could have been a pullback into this level and continue lower. Seems like we got the latter, which is really, really good. And most likely that is due to, let's go to the kind of post that I saw. If we go to the A1 Trading page and you look here, there was an announcement from Trump on Truth Social that went ahead and basically he went ahead and said, we're going to hold off on any strikes. We have some kind of a framework going. So the markets really, really like that. He did that over the weekend. So that's why you're seeing these oil prices way lower here today. I'm curious to see what happens at the 200-day moving average. But, this could be very, very well, especially for the dollar bear story, right? You have, for the first time in a really long time, U.S. fundamentals starting to weaken here. In fact, let me show you this DXY chart. Look. War starts, DXY to the upside. It respects this upward trend line here. The war started way over here, continue higher, and it has never once broken it to the downside. And we did do that last week, going into the last half of the week. So that's very good. We had June prices, June inflation coming cooler. Now with oil prices low once again, maybe we can see that translate into July's number as well, and that could add more fuel to the dollar weakening story. So we're seeing a little bit of unwind in the dollar. Speaking of the dollar and the score of it, let's go to the Edge Finder. I think it should still be. Let's go to currencies only. It's actually not getting a reading at all. Let me see. Let's go majors only, just to kind of highlight this. Major currency pairs only. You have dollar, Swiss bearish, Aussie, Euro, Kiwi, and pound bullish, which is really, really good to see. I thought the asset scorecard on DXY on US dollar was bearish. Now it's -3. So borderline of a -4 bearish reading. But I'll take it. I'll take it. We have lower oil prices. We have yields also lower as well, which I love to see, with the 10-year down 1%, the 2-year down 0.7, and the long end starting to cool off a little bit. It's still elevated. Don't get me wrong. I think we still have a little bit of fears as to the Fed maybe not acting the way they should, and the market pricing that in and kind of taunting them a little bit with the long end of the curve, pricing in a higher risk premium. But looking pretty good. And then for Japanese yen, let's go to JXY real quick and look at that. We went ahead and tapped into the 200-day moving average, and now we are above that 200-day moving average. So this is kind of the positioning where I had an idea or the anticipation to go ahead and start accumulating yen to the long side on a very, very big discount. But now here's the question that I have to ask myself, okay? Is this the start of something bigger, okay? Or is this where I should buy and start accumulating position to the long side? I kind of get a little bit scared because of how fast we get there, you know? So like we had only 2 candles took us all the way to the 200-day moving average, which was 3% away. But you know, in currency world, 3%, 3.6% is a big move, right? So the way we got here was rather fast. And so I kind of want to see if there is a cool down or a continuation higher. We are now trading above the 200 on the JXY chart, and if you go to USD JPY, you are also below the 200. So something tells me that there's a chance that we can continue lower. And when we have some interventions, right, whenever we actually seeing a kind of collaboration between not just Japan, but Japan and the US and the South Korean market as well. So it seems like there's a team ready to go ahead and tame this lower. And again, just adding this also that the US fundamentals are shifting to the bearish side of things, I think that USD JPY has a chance to continue lower. So I hesitated on 155. Maybe I reflect 2 weeks from now and I say, damn it, I should have bought it. But right now I'm in good shape here. I'm going to let this fizzle out here. But 155, if we get back to it again, maybe I can add a position and then have another open position at 152. But here's the thing. If this is one of those bigger interventions like we saw in 2022, 2024, you can very easily get all the way down to 140, right? And that is about 1,600 pips from where we're at right now. So that's kind of what keeps me a little bit of, cautious, but we'll see. I think 152 could be a good risk to find opportunity to build a longer term position and have like some stops down here. That way, if I do experience some drawdown and go all the way to like 140, I can get stopped out and then just have more open orders down here. But with USD JPY, I definitely want to be a buyer of any meaningful dips. Like I definitely want to buy. I just need to know, do I buy here? Do I buy here? Or if price is moving fast to the downside, I can buy at 140 or somewhere within this area. But nonetheless, my bias is to the long side. So that's what I'm looking for on USD JPY. When it comes to my euro dollar position, that is still in profit. So that's looking pretty good there. Again, I'm targeting that 200-day level of resistance over here at the top, which is on DXY, looking like that 99 handle of where the support could be for the 200-day moving average. So that's what I'm looking for on euro dollar. I'm going to keep it. If you guys took the trade with me live on that live stream, I think it was Thursday or Friday. No, it was Thursday when I took it. Then that's kind of what I'm looking for. So yeah, that's looking good. Gold, I'm still in gold as well. It's been pretty flat, pretty choppy, but it is what it is. And oil just continues lower today, down almost about to be 9%, which is really, really good for that inflation story. So yeah, guys. So what are your guys' thoughts? Are you guys, I'm curious, Japanese yen, very, very hard to trade just because also you have essentially no structure to go off of, right? Like you have, when you have things moving like this, for example, fibs do not exist. Okay. Like, this is a fast moving chart to the downside. If you're experiencing it, are you guys shorting this? Are you guys buyers of this? Like, what's your thought process? Or are you guys staying in way altogether? Type 1 if you are buying this this sell off, or type 2 if you're selling the sell off. I'm curious to know. What's up, Jeremy? What's up, Sluggy? Hope you guys are doing fantastic. Look at that 2 hour after the reopen currency strength. Yeah, let's look at that. Good idea, Max. Currency strength. Yeah, look at that. 2 hours after, and they just shot up higher, for sure. There's definitely been a lot more activity as far as the intervention goes. Like it's not this anymore. You know, like this was only Japan trying to maintain or defend 160. This is like Japan plus South Korea plus US working together to keep this low. You do see more unwind on the carry trade. So here's actually like an actual question that I have on the back of my mind when it comes to my buying of Japanese or buying of USD JPY. This is kind of what I have in mind. Let's say I find my level, right? Whether it be 155, 152, 140, wherever the level may be. Let's say I find it and I start accumulating a position to the long side. My question then becomes, well, where am I targeting, right? Am I targeting 164 again? Probably not. Am I targeting 160? Maybe. But the question will be definitely driven and influenced by how hawkish is Bank of Japan, right? Have they elevated their interest rates? How dovish or neutral is the US Fed? Are they reducing their interest rates? And what is happening to the spread of that interest rate differential? Because right now, let's say if you get a meaningful dip, you still have Japan at 1%, and then you still have the Fed, which is neutral to hawkish. I think we can arguably say that inflation gets carried away, will definitely be hawkish. And in that scenario, it would be wise to buy USD JPY because the spread would hypothetically be widening as Japan stays kind of neutral, and then the Fed continues to hike rates. So that's kind of like the bullish case there. But if you have an environment where you have a continuation of, let's say, U.S. fundamentals starting to weaken, maybe we see labor markets start to deteriorate a little bit, and that would cause the Fed to go ahead and start lowering rates. And then you have an environment where Japan is actively trying to raise their rates. Well, that, like to Sluggy's point, makes the carry trade less attractive. And so at that point, I wouldn't be targeting 164. Maybe our target 160. And the more narrower that interest rate differential gets, the less of a trending chart we're trying to trade on, right? The more chop we see, maybe we see USD JPY kind of get into this choppy chart like you would see a euro dollar chart like this, for example, right? Where it kind of just hangs around here and is trading more off of the near term current fundamentals as they're changing. So that's kind of my thought process there. So that's something that I have to think about. And here's another thing that makes it a little bit tricky. If we get the latter environment where you have the US Fed anywhere from neutral to dovish, and you have a slightly hawkish to hawkish Japan, then cost basis matters so much, right? Because if you do get a choppy environment, right? Let's say an environment starts to develop into a choppy environment where the interest rate differentials is narrowing and the price action is no longer as trending, right? And let's say this is the top of the range and this is the bottom of the range, right? Well, if I jump the gun and I blindly buy at 155 and this turns into one of those choppy environments, then I am buying in the middle of a longer term range and my cost basis is not attractive at all, right? So at that point, I want to start looking for discounts. So if that makes sense, type 1 into the chat. My apologies if it didn't, but that's kind of what I'm thinking in the back of my mind is like, I want to be a buyer of yen. Is going to be this attractive carry trade or not? Looking forward a year from now, a year and a half from now. And if it's not, then where can I find a very strong cost basis entry opportunity? So yeah, that's what I'm looking for. USD JPY. It's a little bit tricky, but right now, I'm okay with being patient too. You know what I mean? So again, I'm not gonna hurt myself by just buying blindly or selling blindly I'm gonna let this thing play out. You have lots of momentum and lots of activity right now, so I do expect some choppiness, and I just would rather not be in that for now. But very interesting opportunity if you do get a meaningful dip for a trade. I mean, I've been waiting on this trade for a very long time where I can buy the dip on USD JPY, catch the appreciation, and also catch positive carry. I think that would be a really, really good trade. It's also data dependent. I mean, look, if U.S. jobs miss this, yeah, if U.S. jobs continues to miss, then you have PCE that came in neutral, but then you had PPI, CPI came in cooler. That's definitely adding to the dollar bearish story. And weaker labor market will definitely continue to hurt that as well, right? Because the Fed has a dual mandate. So imagine a scenario where, as of now, as of what we're seeing right now, you have cooling U.S. inflation, but then you have U.S. jobs starting to take a hit. The Fed has a dual mandate to tame inflation and maximize employment. And so if inflation's taking care of itself, they can definitely focus on the labor market and cut rates to satisfy and help it up. So that's definitely a possibility. And that's what I think the market's going to be caring the most about is this upcoming round of labor market data that will definitely go ahead and give us more clues as to where the Fed could be heading. And you know what? What could be very interesting as well? Let's say, right, because in the last Fed meeting, FOMC meeting, Warsh was pretty neutral to dovish, right? He wanted to talk down the bond market, but the net outcome we saw was him kind of just being patient and trying to be dovish. Bond market did not like that, right? They pushed yields higher. Let's say that we do have a continuation of inflation figures coming cooler, and the labor market starts to take a hit. The bond market would be like, you know what, maybe this guy was right for not being too hawkish, right? Imagine you hike interest rate, but then you start seeing a round of bad U.S. job numbers. You know, that could be good, and that could continue to even probably enhance or increase the move as far as a yield or repricing. What's your outlook on pound dollar? Right now, I'm a little bit bullish on anything major currency related, like euro dollar, Aussie dollar, pound dollar. I like the pound dollar a lot. In fact, Friday would have been a really good opportunity to go ahead and buy the dip. So we had with pounds, you had a pullback into the 38.2% retracement level. And look at that big candle. I mean, look at this big wick here on pound, right? This is a pretty nice looking wick. You pulled back all the way into the 38.2, this level of support, and there's also a 200-day moving average right there lined up with it. And immediately that same day, you had lots of follow through to the upside, and you had a really nice bullish candle there. And you're seeing a continuation for pound to the upside. At these current levels, I wouldn't buy pound. I think the train has left the station. If you're looking at a risk to reward opportunity, this is it, right? If you're buying pound right now, market order to the long side, I'm targeting probably 1.355, but then my stop loss would have to be below this support structure right here. So you have a negative risk reward ratio, right? So like it wouldn't be a good trade. It wouldn't make sense for me to chase prices right here. I think it's bullish to the upside. So let's say if anyone in the chat here hypothetically bought somewhere within here, I think you're in good shape. I like the trade to the upside. I'm reflecting that position via euro dollar to the upside. So similar situation, we had the pullback here. I executed to the long side here. I'm going to turn this level of resistance into support. And then I'm targeting the 200-day moving average, which is the level of resistance right above here. So that's my thoughts on pound. I like Kiwi to the upside as well. It looks pretty nice. Aussie, not the biggest kind of attractive currency pair, I would say, just because they've had a recent round of cooling inflation data. And so that's why I probably wouldn't proceed with that. And one thing, guys, I think I may have forgot, so my apologies. I'm going to highlight this one time real quickly here. If you guys are in the market for a new brokerage, right? If you're trading CFDs, Forex, and you're looking for a new reputable brokerage that is very well trusted, go ahead and check out ACAP. They are offering a 20% welcome bonus for a limited time. So go ahead and just click the link in the chat, or you can go ahead and scan the QR code to the left of the screen there. But ACAP is very, very a good brokerage. Not for U.S. clients, but for anyone else, you can go ahead and continue with that. What do you have for U.S. oil? Yeah, let's talk about oil. So oil's down 9% today. I say we look at what happens at the 200-day right here. This would be an opportunity for the bulls in this market to go ahead and take it higher. But as of right now, I think with oil, the likely probable scenario is that you range from $65, $66, $67 a barrel to 84. I think that is the new range. In fact, I'm going to turn this into resistance for now because it is resistance now. Let's go ahead and make this a little bit wider. So this is where I think the new ranges of oil is going to be. From here to here, okay? What I do like about this range, though, is that if prices stay within the range, especially the lower bound, you could see another round of cooling inflation data. So that's my process with oil. But it's really good, right? It's oil. It's down today. You also have yields today. You have optimism coming into the picture. You have a clear risk on day for the equity story as well. So that's what I like to see. DXY here is holding on those bearish technicals, right? So we had this upward trend line here. It did not break the entire time of the war up until last week. You had a really good follow through on that upward trend line when you broke it, and then you also had some pretty clean follow through as well when you broke through that 100.5 level, right? This 100.5 level was resistance. It capped advances for a long time. This was a very long-term range. I think it was a year. May of 2025. You capped it once, twice, 3, 4 times, 5 times, 6 times. This was a very solid level of resistance. You follow through with that, and it turned into support, right? So 102 held. Now 100.5 is holding quite nicely. The only thing that I'm looking at, the next hurdle that I have in mind is that 99.15 level of support here at that 200-day moving average. So we'll see. And from there, you could have a pullback into 100.5 and then continue lower, or you could have a straight shot moving lower. It depends on oil. It depends on yields. It depends on also maybe partially USD JPY, right? If they continue intervening there, you could just continue to see, selling of USD, and that could just trickle into the broader USD weakness there. So that's what I have in mind. I don't know, man. Everyone switched over the weekend. Such a powerful taco. I think though, like the market understands that, and it's kind of used to it now. You see that theme where you have escalations going into the weekend. During the weekend, you either have peace coming into the market open, and then Monday, Tuesday is risk on. So it's the market's caught on to that. Yeah, interesting to see what happens with oil. Nothing still changed. It was just a pause in attacks from my understanding. I think they both have some kind of agreement and framework, but again, that's been said before. Nothing new there. But the market is definitely taking that and running with it. So maybe the market knows something that I don't. I'll be honest. I'm not the biggest expert in that and what's going on geopolitically over there. I do my best to kind of keep up with like financial juice and stuff like that. But yeah, maybe the market doesn't. Maybe the market knows something I don't. Fun times, yeah. What's interesting with USD JPY, something I noticed 2022 was big volatility intervention. Then you had 2024, and then you have 2026. So it seems like 2 years, 2-year anniversary. And also too with 2024, you had the August 5th sell-off, right? The last week of July going into the first week of August. And that is exactly what's happening here today in this current time. So that's very interesting. Again, I'm curious to see what happens as far as follow through goes. I want to build a long position, but I want to be mindful of a good cost basis in the event that you start to see shifting in central banks and the rate differentials kind of narrow down. Is this a super strong trending market, or does it turn into a choppy market? You also have other influences as well as the GPIF, right, where you have essentially forced demand going on for pensions in Japan, which is good. That's going to help the currency. Again, we don't have any timeline from my understanding. No timeline, no figures, no quotas as far as that goes. But again, that could be another way for Japan to go ahead and solve this problem of a weakening yen and create more demand for Japanese yen. Do you ever trade Aussie Kiwi? Yeah, I do. I traded it earlier this year when I was going along the Aussie basket. Yeah, it's okay. That looks like an interesting chart. Aussie Kiwi. It's usually range bound. I like to see what happens here at that 200-day. I will say, like I said earlier, Kiwi a little bit more hawkish, I would say. And then Australia just had a recent round of inflation data that was cooler than expected. So that definitely makes sense for Aussie Kiwi to trend lower there. We'll see it. In fact, let me look at Edge Finder and see what's going on with Aussie Kiwi. Aussie Kiwi. Look at that. It's very bearish. Let's compare the two, right? Let's compare the two economies. Let's go to macro scan. Let's go to equal surprise index to see the current data. So in recent terms, Kiwi has been outperforming the Australian economy as far as data, data beats, right? Beating expectations. So Kiwi is winning that one. Let's go to their inflation data. I'm just curious. So let's go to inflation data, CPI. We'll go to Australia first. You can see here they're clearly trending down. This is very bearish for the currency, right? This would influence rate expectations. If you see cooling inflation data come in, maybe the central bank of that economy doesn't have to be as restrictive as hawkish. So that's very bearish for Australia. Now let's go ahead and toggle Kiwi and see if we see a divergence there. Look at that, right? So inflation starting to make a meaningful jump higher. And so Aussie Kiwi actually does look good. So thank you for bringing that to my attention. Aussie Kiwi here, what I would like to see technically happen, I like this level of support to get broken down, a break below that 200-day moving average, and to continue seeing the edge finder score being bearish. I would like to see that. Now let's look at growth. So let's go to economic heat maps for Australia, see what that looks like. I just want to see a holistic view there. So growth amidst expectations. You do have inflation, which cooled, which is bearish. You had inflation. PPI came in higher than previous, so that was bullish for the currency. But then you had CPI come in cooler. Let's go to Kiwi. Kiwi's a little bit different. So unemployment rate improving, bullish for the currency. You also have inflation figures coming in higher than expected. So previous was 3.1, then it came in at 4.1. We saw that big jump there. Retail sales doing better than expected. That's bullish for the currency. Services PMIs slightly lower, bearish. Manufacturing PMIs better than expected, and GDP growth flat. So you know what? Kiwi is in a better shape, I would say. So I actually do like Aussie Kiwi to the downside actually a lot. So I'm going to be patient here. I'm going to wait for what happens. I'm going to put an alert here below that 200-day moving average, see if we see some follow through. That's a pretty good looking currency chart, I will say. I like that. I like that a lot. Let's see. Yeah, even use Kiwi long. Yeah, for sure. I mean, you have for the first time in a long time, US dollar, fundamentals kind of tilting bearish. Kiwi chart looks pretty good too. You have this level here, this horizontal line. This was resistance. I'm going to flip this now into support. You're also above that 200-day moving average. Now, as far as how far we can go to the upside, I don't know that, but this is technically a bullish chart. So I do like that a lot. Let's see. Any other charts though, that you guys want me to go ahead and for me to go over? Definitely put that into the chat. Aussie Swiss. I saw that. Okay. Aussie Swiss. Let's see what's going on there. I'm kind of painted more. Let's see Aussie Swiss Edge Finder. I kind of don't like the technical chart, to be honest. Nothing. Is it neutral? Let's see. It's not even pulling up. If it's not pulling up, then I don't want to go ahead and proceed with that. USD CAD. Let's look at USD CAD. Yeah. USD CAD, I would say bearish right now. Again, in a weird way, if we get any significant, meaningful pullbacks in dollar, meaningful pullbacks, like big discounts, I'm a buyer. So USD CAD, maybe we can somehow fall all the way down here. Another 200 pips or so, maybe I look to buy, depending on what the outlook, depending on what the fundamentals look like. Maybe you get a pullback into dollar pairs, and then you see a clear kind of development as far as re-escalation goes in the Middle East or whatever the case is. I want to possibly look at it being a buyer very, very long term if we get any meaningful pullbacks in dollar. But for now, I think USD CAD probably just drifts lower, in my opinion, as you have this dollar unwind happening. And we got to agree, this week we have some clarity and good ideas in the past week. Man, I am happy to see that. But here's the thing, right? Most of the currency charts, I mean, not even just currencies, everything was kind of like on key levels that could have went either way, right? You had DXY right over here hanging out at a key level. You had, for example, the Nasdaq right here at this level of support, right? Could have gone either way. You had oil, which is the big one. Oil is pretty much kind of trickling into other things, right? Oil was hanging out right here. This could have been a pullback into this level and continued higher, right? Or this could have been a break, retest, and continued lower. So that was a very key level there. We had a lot of kind of assets that were just at key levels, waiting to go either direction. Now this week we have way more clarity, which I love to see that. And like you said, Sluggy, we have lots of clarity as far as you can make directional calls more confidently, I would say. I like that. Another interesting thing that I saw too, I'm sure you guys all saw this picture here. Scott Bessent to do the to-do list at the cabinet meeting, but also too, oh, did I exit it? Speculative yen shorts hit the biggest ever, right? That was very crazy. That's why I'm probably thinking that this move here could continue lower, and why I want to be cautious and patient and see if we can maybe get more pullbacks in USD JPY. So, yeah. And with that, guys, I think my portion of the segment here is starting to run short. So I'm going to transfer this over to Nick here. Thank you guys so much for watching. I'll definitely be back in about 30 minutes or so with Marco. So stick around, stay tuned. And with that, we'll go ahead and put Nick on.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back. Hope you're all doing well. We are looking at a interesting open on the stock market side of things. Gold also popped and then dropped. Oil, huge slide lower today. Really interesting kind of back and forth. Of course, we are back on the, maybe there's a ceasefire type trend now. All of a sudden, we've had oil come in here, popped there on Friday, now selling off again. And sellers, at least for now, seem very strong. You got a down 9% day on oil. Not messing around there. That's a pretty good sell-off. Gold also about flat on the day. And then if you are looking at stocks here, you've got the S&P 500 rallying back here, looking like it is, we went from threatening to make a larger scale breakdown in stocks to now making that push maybe back towards the all-time highs. Stocks have been inherently just a range-bound market for, several months now, and so has gold. You've really seen both precious metals and stocks kind of behaving similarly, where they're just not making any directional, sharp moves. The best play for people who have been more on the range trading side of things has been just, selling rips, buying dips, back and forth here. It's not really my trading style. So admittedly, it has been kind of not a great period of time in my trading the last few months. I'm not negative on the last few months, but I am just very flat in terms of my P&L for like the last maybe 3 months has gone up and down and up and down. And so be it. It happens sometimes. You got to wait for it's for my style of trading, which is predominantly pretty trend following. The reality is that the market doesn't trend all the time. It trends very aggressively during certain windows. Like if we're just zooming out on gold, right? This is a really nice trending period. Maybe this is a really nice trending period. This is a really nice trending period. I did make some money during this time with gold, did really well on the short side of gold this year. But there's also these times and these times where, you can get chopped to pieces really easily. And this is why, I'm always a big fan of keeping position sizes small, because one thing that's really hard is you might directionally think gold's going to move higher or gold's going to move lower. But the market will throw you for a loop sometimes and just go nowhere. And that can be very, very tricky, because a lot of people can get, really frustrated trying to trade a directional bet in a range bound market. That is a inherently very difficult style. And vice versa. If you're more of someone who likes to sell over extensions one way or the other, or buy over extensions to the downside, that works really well if the market is kind of tolerable in both directions. Where it works terribly is when you do get a solid trend. So then you might say, well, which one is better, and how do we know when the market's going to trend or when it's not going to trend? Well, guess what? You don't. And that's why it's hard. Trading is hard because there's a strategy. Like every system, every strategy has windows of time where it looks phenomenal and windows of time where it looks terrible. And the reality is you don't know what the next environment with certainty is going to be. You might have a opinion that you think gold is going to go higher, but what if it does, but we range for another 2 months before then, right? You could still come out. You could think that gold is going to go higher, ultimately be correct, and lose a lot of money if you get caught in the chop. Do you see what I'm saying? You never know when the market's going to just sit still and chop back and forth. And so there's going to be times there's just going the point is you have to accept that there's going to be periods where you're just going to give back P&L. You're going to experience drawdown. It's part of the game. Where do you see the S&P 500 headed for 2026? Yeah, so when it comes to stocks, I wouldn't be surprised if overall, we do end up moving higher this year. But we have a couple key events that are, you have, for example, August seasonality, September seasonality. Let's look at that. I think it's a good time to discuss this really quick. By the way, check this out, guys. Little visual upgrade on the asset scorecard tab. Look how nice that looks, man. We spent this right here and this right here. That is Saturday for me. Like rebuilding this, straightening up a lot of our views. Oh, we also added this. We added a visual crowd sentiment gauge. Doesn't seem like it would take that long, but when I'm working on this stuff, I really want it to be just right. So we spent, I spent, probably 3 or 4 hours on those 3 items. This I built with the help of Gemini, then Claude. This is not AI. This is not AI, but just building this stuff, Anyways, so what was I going to show you? We were going to talk about, we were looking at S&P 500. Oh, yes, seasonality. So let's go seasonality. Looks very pleasing. Thank you, Sluggy. Appreciate you, my friend. Okay, annual seasonality. So check this out. We're going into the next 2 months are in the last 10 years, the historically kind of worst period of the year for the S&P 500. the late summer months, right? August, September, these months into October are generally a lull period in the stock market. I work on websites, Nick. I know what you've been through. Yeah. If you wanna enter the abyss, head over to a1trading.com. We have, I do want to know, like when I die and I get to, see all the life statistics that I'm going to have, I just want to know how many hours did I spend on Edge Finder and our website? At least like 3 hours per day or more. But anyways, so check this out. Nick, check out VIX seasonality. I think we have that. And I also want to look at that. Do we have VIX? Maybe we don't. I know. Oh, actually, I know where we do have it, but I'll show you in a second. So S&P 500 has been pretty choppy recently. I wouldn't be surprised if between now and year end, we followed seasonality to an extent. Like what I mean by that is I wouldn't be surprised if we saw some more rockiness. And then maybe that late year period holds out. This period of time, that November, December period, tends to be a historically strong period of time. You also have midterm elections, October, November. So there's a very good possibility that you see a little bit of a market pullback, etc. Yes, there's a VIX seasonality. Yeah, I think it's under monthly seasonality. Let's see. So here it is, VIX. Yeah, so here's August, right? August historically, very volatile jump up in the VIX. And that makes sense, right? If you're thinking about if the stock market tends to have lackluster performance during the months of August, September, historically speaking, it would only make sense that that coincides with a little bit of a uplift in volatility. So yeah. I'm only a technical analyst and I'm not very profitable yet for almost 2 years now. What I would love adding a tool like Edge Finder for learning fundamental analysis. Okay, sorry, let me read that again. Would adding a tool like Edge Finder or learning fundamental analysis help me to become a successful trader? Hey, Josh, thanks for the question. So in terms of everyone's journey is a little bit unique. I know it's not the answer you want because I know when I first got started trading, it frustrated me when I would hear people say like, find a strategy that works for you. And, that felt frustrating because I wanted, when I was getting into trading, I wanted a path. I wanted somebody to show me like, hey, step by step, how do I get to be profitable? And I'm telling you, from 10 years into doing this, investing everything I've got into trading, into building the tools to help me become a better trader, I would be silly to tell you that I have some sort of antidote or easy solution to becoming a profitable trader. I don't. We don't sell magic potions here. We don't sell crystal balls. This is a never-ending puzzle. Now, some people get addicted to it, like myself. We get addicted to this challenge that is trading, that is markets, that is studying this stuff. I found the more I looked at this stuff through the lens of fundamental analysis, understanding, okay, like pause for just a second and think about the dollar. Why is the dollar moving lower? Why is the dollar moving higher? If I can understand why, some people don't think that's important. Some people think, oh, it doesn't matter why it's moving. It's just moving. Just focus on that movement. To me, that was not a good answer. That was not a good approach. That didn't work for me. Technical analysis is just looking at what's printing in price, trying to ignore what's driving price. That did not work for me. That was not a feasible answer. So I set out years and years ago. I was like, all right, why? Why is this moving? Why is this move happening? And you start going down the cycle of reading news headlines, which is a dangerous and slippery slope. And a reason why a lot of people don't like fundamental analysis. They look at the news and they say, oh, it's just doom and gloom headline. Agreed. So I wanted a tool that would help me filter the news into something that mechanically I can understand. Look at what we're looking at here. This is a list of really important metrics about the economy. And we've gone ahead and factored in, through all the studying that we've done of this subject over the years, how it impacts all of your favorite symbols. Again, I've got no magic potions to sell you. This is not snake oil salesman. This is a screening tool. It is a tool that helps to monitor economic data. If you see value, it's kind of like the sell me a pen concept. If you don't need a pen, I'm not going to try and sell you a pen. If you're not interested in fundamental analysis, if you don't care to add macro or the why behind why moves are happening, if you don't care to add that, then I'm never going to try and sell anyone on Edge Finder, because the Edge Finder should sell itself. It's a tool that tracks and makes fundamental analysis simpler to actually implement into your trading. Because instead of staring at news articles all day long and trying to read what the latest is and trying to keep that all spinning in your head like a madman, I wanted a tool that would map this stuff out visually in a simple, repeatable, pseudo-mechanical way. So now non-farm payroll numbers come into my dashboard. They show up and they impact how I'm thinking about silver, right? I'm looking at all this data. I'm understanding this data because it's hand delivered to me through automation and software. It's our life's work over here. It's fun stuff. Will it change everything for your trading? No. Nothing that you can buy will just magically make you a profitable trader. I would never, ever in my entire life, I wouldn't promise anything like that. It's a tool. If you want to take advantage of macro fundamentals in your trading and you need, I think it's a need. I don't think it's optional personally. If you want to be a fundamental analyst, you can't do it in your head. It's like, I used to try and do that. I used to manually fill out spreadsheets. And I know there's someone who listens like, yeah, I don't want to buy Edge Finder. I just want to it's too expensive. So I just do it in a Google sheet or an Excel sheet. Understandably, some people do that. Like a lot of people do that, actually. I used to do that before we built Edge Finder. And I know how incredibly manual and tedious and prone to errors that process is. So we fully automated the process. All the data comes in, populates into our screener, and generates a report card for us. If you don't have Edge Finder, you should get it. If you can't afford it at this time, message us. We're setting up payment plans for people who need to split it up into monthly costs. But yeah, consider it. We also offer trials on the tool. So I'm going to just drop a link here. Chat here. If you're interested in setting up a trial, it is not free. We offer a 30-day access period. Chat right there. Speak to our member, a member of our support team, and they can set you up with a trial period or a payment plan option, or if you just need some more information about the tool. Okay, there's your pitch. Sorry, that was longer than I intended it to be. But it is important. I mean, it's integral to what I do in markets is studying macro. So when I'm looking at stuff right now, I do actually tend to like gold. So gold and silver, I like them to the upside. Gold's got a +4 fundamental score, +5 overall. Technicals look decently healthy. Seasonally, it's a strong period of year for gold. Sentiment and COT, crowd sentiment. I saw this. Oh, this is also what I worked on this weekend. Check this out. Puts call ratio, incredibly improved, in my opinion. That was great and very transparent, Nick. Thank you. Basil, appreciate you, my friend. I don't want you to buy my software unless it is a reasonable expectation. I have no interest in selling dreams. It's not the type of customer we want. We want people who are practical, who recognize that it is a tool, not a magic potion. As you might expect, working with people who believe the tool is some sort of magic potion is not fun. We have to walk people off that cliff all the time. Hey, this tool is not going to magically make you $1 million. Unfortunately, a lot of people want that so bad that they will kind of conjure that in their head. Edge Finder is a remarkable tool. It's a phenomenal piece of software that we have worked really hard to build, but it's not magic. Anyways, so check this out. Put call ratio, we did something. We took the put call ratio. I'm so excited about this. And we made it a moving average calculation. We had to rip out a bunch of scoring for this. We recalibrated it completely across several aspects of the software. But put call ratio, you can see it faintly in the background. This is what it used to be. It just would show you the spikes. The problem is put call spikes dramatically. So you have like one day where there's just massive call volume, one day where there's massive put volume. What we decided to do was we decided to use a 5-day moving average applied to this to smoothen things out a little bit. Okay. So what this is showing you is put call, instead of spiking around and producing like many jumps in scoring every day, which is what it was doing, right? You'd be getting a +1 and then a -1, and then it would be 0. Like you would jump dramatically. Now it'll produce a little bit more of a gradual score. So right now, the way to read this, we see elevated put volume on a rolling 5-day average basis. That tells me that S&P 500 sentiment has been pretty bearish recently. So a lot of people buying puts, right? So when we're looking at this, we have significant amounts of put volume going on. You guys, I'm such a nerd on this stuff. Having it turned into a moving average. Also, check this out. What prompted me to do that in the first place? Look at this move. Unbelievable spike. This outlier data point like broke our chart for the put call ratio for gold specifically. On this day, there was such a ginormous amount of put volume that came on relative to call volume that the chart like completely broke. And so I was like, okay, let's smoothen this out. So now we have a moving average. And what you can see right now, believe it or not, this makes me hesitant to go long gold because call volume is on a relative basis now very attractive. Or I'm sorry, very popular. So we can see the put call volume completely flipped. We saw lots of bearish activity on gold, followed now by a rising bullish sentiment. We can confirm this a little bit if we go look at our net options volume. And let's switch over to our gold chart here. Look at this. Uh-oh. This makes me nervous to buy gold right now, because now you have exceptional feverish demand for calls on gold in the options market. You can't get all this from just looking at price action. That's why we build these sorts of tools. You can't see that very well in here. But what that tells me is that on, the last few days, we've seen a huge amount of call volume. People betting, hey, gold's going to rip higher, right? And here we go. The disappointment factor is so frequently the case. When you see these huge bursts in call volume or these huge bursts in put volume, it is fascinating how often that marks short-term tops and bottoms. Now, I don't trade based on this alone, but I factor it into my analysis. So when I'm looking at the put call ratio for gold, what we can see is that there is a lot of relative call volume to put volume. So that factors in here as a bearish signal. If everyone is bullish, the software goes bearish. You see what I'm saying? See how that worked? That is this section, just one of many sections that Edgefinder is monitoring. And that's keeping me a little bit cautious on gold. If I still had the right technical setup, I would still buy gold personally, but I don't. Gold has been so choppy. I'm looking for this type of move. That might be pretty attractive. But here in the meantime, with all that call volume, I wouldn't be surprised, not at all, if there's this type of flush here just to kind of frustrate the call buyers. You see what I'm saying? That is what the options data, that's why I love looking at that stuff. You can get an idea of what, kind of massive amounts of pending, massive amounts of sentiment is doing and what it's thinking. So yeah. Anyways, what about the Nasdaq? Yeah, let's look at it. So Nasdaq here, we can take a look at the put call ratio. Look at this. A lot of call volume coming in. Now that kind of contradicts what we saw in S&P. S&P 500, we saw the opposite, right? Call volume was high for Nasdaq, but put volume high for S&P. Gosh, I don't know. I love all of our options tools, but I do think that my favorite is back to the put call ratio. I like the net options volume a lot though too. Net options volume, what it does is it takes call volume on the day minus put volume on the day. Now, why that matters so much is it can give you a nominal kind of showcase of what volume looks like on the day. Whereas put call ratio, it's just a ratio, right? So the ratio sometimes misses how big of the activity, like how big the open interest is on the day. It can be missed in a put call ratio. So that's why having both charts is important. Nick, do the Dow if you could. Yeah, the Dow's ripping here higher. Let's take a look at it. Look at that. Dow Jones is making a move here. Something had earnings this morning, I bet. I'm curious what did have earnings today. Let's see. And this is even like, look at this. Here's Dow Jones, a little bit more bearish activity, perfectly primed for a pop higher. Let's take a look here. I'm going to go earnings scanner, earnings calendar. Today you had nothing huge from what I can tell. Maybe I'm missing something. Oh, Palantir has earnings today. That's interesting. Palantir has earnings after the bell today. That will be a potential market mover. Although Palantir has become much less in focus, I guess, in terms of the AI stuff. Was it Cat? Did I miss something? Nope. Caterpillar's tomorrow. So anyways, yeah, something's moving in the Dow. But actually, I don't know if it's necessarily the Dow because look at this. You also have the Russell ripping higher. Are yields moving lower sharply today? They are. So anyways, but yeah, back to precious metals for one more kind of final thoughts on this. With gold, this is a tough one to try and place trades on. Like I want to be long gold, but I would only do that. I'd only take the long setup if the chart started to show some strength. Like one of the simple things that I look for is, yes, macro, I want it to look right. I want, options data looks great. Like I want that setup. And I have a lot of conviction in a lot of areas. Institutions are very long gold. They even added more bullish net exposure. Like I would like to be long gold, but I don't buy gold just because the macro looks good. I'm not, I'm looking for a trade. And from a trading perspective, I'd really like to see us break through some key levels. Something like this. So if we can get some breaks through structure, etc., 4150 looks really interesting as kind of like if we can get up and over 4150, that looks interesting. If we can get over 4200, that looks very interesting. You see what I'm saying? Like that is, and I mean, it's very frustrating when gold just goes sideways. It's my favorite thing to trade, but even my favorite thing to trade, this and Nasdaq are my favorite things to trade. But you know what? You can't. This is why I don't trade one thing. I understand some people are like, I'm a gold trader only. I only focus on gold. Great. But like the problem with only trading one thing is you only trade one thing. And what happens if 3 months go by and it's not an ideal circumstance to be trading that thing? You see what I'm saying? You can, I'm telling you guys, I got so many messages this year from traders who were, this is like such a meme, but they had a gold mine going on gold. Go figure. And what I mean by this is that for the last few years, they had a phenomenal time trading gold. Because if you were long and strong in gold from 2023 until now, if you started to download in your head, and I'm not calling anybody out because like this is just a common occurrence in trading. Look, if between 2023 and 2026, you were printing on gold. You were doing really well with trading gold. And then 2026 came along and swept up a lot of your profits. I know a lot of people, again, like I said, I got a lot of comments and emails and DMs from people who were frustrated with their trading experience, where they went from doing really well to doing really poorly. And I'm not kidding when I say that I saw people during this time whose strategy was wake up, buy gold. They would comment, you know, every time and this is what recency bias is, a thing I talk about a lot in markets. It's really dangerous, because if during this time for 3 years straight, every time you bought gold when it was down on the day, you were rewarded within a week or two, our brains we're like mice coming back to the same spot to get the cheese every day, right? You train your brain like, hey, every time gold goes down, it's an easy win. Buy gold every time it goes down, it's an easy win. And then when the cheese gets moved, the mouse can't find the cheese no mo. What's that book? Who moved my cheese? I think I had to read that for like high school English or something. There's a book about what I'm saying. But anyways, you've got to be able to adapt. And the thing that we ranted about, man, over and over and over, was that the macro environment had totally changed. I'm not short gold anymore. I have retired the shorts. I actually did quite well in the precious metal short side of things this year. I shorted silver and gold, and did very well. There was one notable silver trade. It was a small trade for me, like position size wise, and it just dumped. Like, it just flooded. It was amazing. I think I took like maybe a $2,000 risk and closed that trade out for like, I want to say maybe around $18,000. It was insane, because the chart was just flooding lower. And again, once you get that macro changing environment, we went from cooling inflation, interest rates coming down, how many rate cuts we're going to get this year, to how many hikes are we going to get this year? Inflation's a problem. Central banks around the world are hiking interest rates, not cutting them. And that totally killed the perfect uptrend. And if you're a fundamental macro trader, if you prepare yourself right now, if you study and focus on this and learn how to read macro, the next time it comes around, you'll be ready. That's the thing about learning in markets. Every time you go through an experience and you learn the macro behind something, guess what? You get better at prepping for it the next time around. I bet you there's a lot of people watching this right now who trade precious metals who say the next time a war breaks out, I'm going to think a little bit more about how that could impact gold, because a lot of people snap bought gold on the outbreak of the war, thinking that it would be an immediate, easy printing money, gold's going to the moon. But with a little bit of experience and knowledge of macro, oil prices and inflation and interest rates are a dominating thing to think about with gold. And so the next time around, I bet you there will be a lot of people who understand the macro a little bit better. And that's the cool thing about learning. You can always improve and always figure things out better. Like I said, if you are interested in Edge Finder, we'll drop a link here in the chat to where you can actually, let me click here, chat here. If you're interested in getting access to a trial to our software, setting up a payment plan to access the tool, if you need some, how much does Edge Finder cost right now? Message in, we'll give you all the details, all the options. We offer different pricing options. For example, like if you want to split it up into 3 months, but it is a one-time payment overall. So like you don't pay into continuum. It's not a subscription. You pay, you're done, you have access to it, which is really nice. I know a lot of us are tired of everything being a subscription nowadays. I know I certainly am. And so hopefully Edge Finder is a breath of fresh air on that. If you're a long-term trader here for the long term, like the cost of Edge Finder, if you use it for 10 years, is like nothing. It's like super, super low cost. And that's by design. If you're here for the long term, we want to give you tools that essentially cost you very little. and you can just keep using them and using them and using them without paying them every single month. With that said, we have got Alan Perez coming back here for a second segment. How lucky are we? Stay tuned. We're going to bring him back after this quick break. And here we go. Stay tuned. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Once again, hope everyone is doing fantastic. As the chat there says, go ahead and join the free Telegram channel. Guys, you guys will love it. It is completely free. Bonus content, analysis, questions, polls, all that good stuff. You can find it right there. As the market is getting closer to the open, we are seeing a continuation of oil lower here, down 9%. You're actually seeing, let's look at wrong chart. Yields here are continuing a little bit lower there. I just saw this happen. Edge Finder score is now leaning a little bit bearish on the oil score there, -4 reading there, which is good to see. Hopefully we can see continuation. My thought process here with this oil chart is that as long as you continue to see softening oil prices, that could help the inflation story, that could help the inflation fears in the markets, and that would be all well. So I'm looking for that to continue lower. Again, the next hurdle that we have is going to be this 200-day moving average that we have to overcome. If we overcome that 200-day moving average, then likely you would see prices continue lower up into that 64 handle or 65 handle, somewhere within here, or prices got to sometime in June. But yeah, if you guys have any chart markups or anything like that, feel free to drop that into the chat, and I will do my very best to go over them with you. Again, put them into the chat. I'll do my very best. If you guys are in any trades or looking to take any trades, we can break it down together, the fundamentals, the technicals, the sentiments, and we'll proceed from there. Simo, hey again, man. Good to see you once more. It's a pleasure to be back here. Any trade ideas? Well, I will say this. Am in euro dollar long. It's working out pretty well. I'm looking to target this 200-day moving average here, and where this level of resistance lies at 1.165. So that is one trade that I'm in. I have my field right here. I still have my stop loss right over here. I'm going to keep it there. I'll maybe move it to break even or trail it below this level of structure. But again, I kind of want to target this 200-day moving average level of resistance. I have also gold to the long side there. Pretty flat. Not really loving it. Like Nick said, it's a very choppy chart right now. So I'm looking to see what happens if we get to 4,200. If we get to 4,200 and I see some kind of rejection lower, I'll just cut the trade off. And likely we just continue range bound on gold, which is unfortunate. I wanted to see kind of more bullish catalyst, which we're seeing. Like the net options volume flow is pointing bullish. You have the edge finder pointing bullish. You have, continued accumulation. You have lowering oil prices, all that stuff. But I guess not enough to continue gold higher. So we'll see what happens at 4,200. If you get a break and retest of 4,200, then I think that's actually very positive. And maybe gold gets out of this funk that it's in, and then we can go ahead and target. And then the next obstacle would be that 200-day moving average at 4,500. But for now, go to sideways. That one's a break-even trade. So not the funnest experience, but again, euro dollar is keeping us up in the green. So I like that. As far as trade ideas go, absolutely. So Sluggy this morning, was it Sluggy or Max? One of the two regulars on the stream pointed out Aussie Kiwi there. I do like this one to the short side actually a lot. We do have, this is a range bound currency here, so we need to break this level of support right here and right here. If we break this level, then I would like to see a continued break of the 200-day moving average. And what I'm looking for from a price action perspective would be a break, retest, and then continued lower. If bears step in, I would like to trade this one to the downside. Here's what I like about this one, okay? If you look at top setups page, you can see here that on the bottom left here, you can see that Aussie Kiwi getting a very bearish reading of -8. So I like that. Again, we just need the technical confirmation Also, if we go to this chart right here and we look at the yields between Australia and New Zealand, Kiwi, you can see here that is it really showing right now? So Kiwi's kind of trading upwards. I mean, Aussie's trading up here on the day as well. So I'm actually not going to really put too much emphasis. They're moving in sync here, but the bigger picture thing that I'm looking for is this. Okay, so let's look at this. Is very important. This is going to be a quick crash course on currencies, interest rates. In fact, let me start with this too. Equal surprise index, right? So this what this chart here on the Edge Finder does. And by the way, if you don't have the Edge Finder, I highly recommend you get yourself a copy. Go ahead and chat with the team there, Drew or Emily. Just go on the website, go ahead and chat with them. Say you're from the live stream, and they can work something out for you. But this chart right here, equal surprise index, basically gives you a reading or an outlook as to how a certain currency is performing on their recent data releases. So if you see something, for example, Kiwi dollar at 83% right here, this means that 83% of their recent economic data points, they've been beating expectations versus something like Australia only beating 60%. So on a relative basis, you can see that the New Zealand dollar has been beating expectations more than Australia, okay? But here's the real thing that I want to look at here and highlight. You have inflation, okay? And when it comes to currencies, the backbone of what moves currencies is interest rates, okay? If you have elevated inflation, a central bank is likely to hike interest rates to fight that inflation, and that is bullish for the currency. If you see cooling inflation in an economy, the central bank is likely willing to lower interest rates in line with lowering inflation. With Australia here, you have a situation where their inflation is moving lower. So the central bank is going from hawkish at this level at 4.6 to more dovish. You're seeing a clear trend for kind of improvements there as far as inflation to the downside. Now, when it comes to New Zealand, different story. You have this going on. You have their inflation was pretty tame at 3.1 for some time here, but now you're starting to see a very steep pickup in inflation. It's actually fresh too, so that's good to see. So you have essentially Australia or New Zealand here, inflation ticking upwards, and Australia ticking downwards, right? And so that kind of puts the Kiwi dollar on top there. And so that's why I want to be a buyer of Kiwi, a short of Australia. The best way you can do that, well, the cool thing about currencies is that you trade in currency pairs and you trade things against each other. And so the way I would reflect this idea of going long Kiwi and short Aussie is to go short Aussie Kiwi. And that's why you're seeing this downward pressure here. So I want to see a continuation of that pressure. We have some technical barriers here. So this is support, right? So when price got here, you traded higher. When price got, nearby here, traded higher. Price got here, traded higher. So I want to make sure that this level here doesn't hold as strongly as it did before. And so if this level breaks and then you break the 200-day, then that's a technically weak chart. And I went ahead and trade that with the technicals confirming, the fundamentals confirming all as well. And then from there, the question becomes, well, where do I take my profit at? With this chart here, you kind of have a lot of room to the downside. So this would be something that I just show profits and continue and let it ride for as long as it rides. So that's one thing. One idea is Aussie Kiwi. So that's one of my new things top of mind, if I'm being honest with you. So thank you, Sluggy or Max, for bringing it. This is awesome. Another trade that I really, really like, Kiwi dollar would have been a good one. New Zealand US dollar here. You're seeing a little bit of a pullback. So if you see a pullback into here, I mean, I honestly think that, anywhere buying within here, not financial advice, of course, but anywhere within here, risk defined with a stop below structure. And then you could probably target somewhere like, what is this? 0.6. So like something like this, or even higher at 0.606, somewhere over here. That's pretty good for Kiwi dollar. But again, I already have a euro dollar long, which I like. So I'm riding that one. But Kiwi dollar to the long side too makes a lot of sense, especially if you continue to see a breakdown in the US dollar, right? So with US dollar, you had this going for it. You had the war started over here. You had a bullish upward trend line here for the whole time. You had inflation fears keeping this thing propped up. You had safe haven flows into the dollar, propping it up. And for the first time in a long time, you had a break of this bullish trend line right over here. You had some continuation, and then you had this level of resistance here where it held price below. You broke this level of support, so we had a continuation lower. We actually had a pullback intraday. So this wick right here that you can see was a pullback intraday on the dollar, and bear stepped in and took it lower. So I think that the technicals for DXY here continues to the downside, and I'm looking to see if we find some support here at 99.5. So I'm going to keep riding that trade on euro dollar to the long side. That 99.5 level on DXY likely lines up with this right here at 1.16 on euro dollar. So I like that trade a lot. And for that, that's another thing that I have on my list here. Use dollar yen. Again, something that I'm looking to. I've been very patient on this, and it's starting to play out here. You had intervention from not only Japan, but you had a coordination with the US and South Korea. So that's keeping this thing lower here. We had lots of momentum to the downside. 155 looks like a good level. 152, 153 looks like a good level. But if this continues even lower, you could get pullbacks all the way up to 140 if price lets it get there. Marco, man, how you doing?
Hello, Alan. I'm doing fine. What about you?
Good weekend?
Yep. Had a nice weekend. Did you as well? What did you do?
I went to Houston. It was sister-in-law's birthday. We did a brunch. Spent some time with my goddaughter, and then we came back to Austin.
Cool. Hope you had fun.
Yeah, man. Any progress on the house?
Yeah, a little bit. We built a part of the roof, so now we need to put like metal, or the guy's gonna come and put metal brackets on the wood. So yeah, it's been pretty good. So what about the markets? What are you watching for this week?
Yeah, man. So oil is the big one there. It was down 9% almost at one time, or it was down 9%. And USD JPY on the actually Sunday open, you had a quick flash where it was down 1% or so at a point in time. So lots of continuation there, very different from what we saw over here. This candle here, this was like just Japan giving a little whiff there. Now you're seeing Japan giving it a big whiff, and then you also have coordination with like the US and stuff. So it's keeping it lower. So I think that there's a potential there for it to continue lower. So I'm going to be patient there, but I like being a dip buyer in USD JPY if I'm being honest.
You want to buy the dip? So you want to go long on UJ?
Yeah, if we get I don't know, a revisit of 155, 152 maybe, or even way lower, like 140, somewhere over here, then I would be lovely to buy that. But here's the question is like, well, how do I know if it's going to stop at 154 or 152, or how do I even know that it's going to go all the way to 140? That's like the biggest kind of question that I have in mind. The way I'm going to answer that question for myself is to like not try to jump the gun, because I do think that there's a possibility that you actually do see the ladder where you can see actually a continued slide in UJ. It's funny because 2022 was a big event, summer of 2022, summer of 2024, which is literally the exact same kind of days, like the last week of July going into the first week of August. It's literally the same thing this time. So it's like the 2-year anniversary, whatever, of UJ. So that's why I kind of like hesitate here at 155, and I'm open-minded to buying it on any bigger dips.
I can see a definite repeat from 22 and 24. Also, the intervention lasted for 2 days in 22 and 24, which is exactly what happened now. So it was in Thursday and Friday. I personally think this is going to be a prolonged move lower because that happened in 22 and 24. So we had the initial jump and then we had the grind lower. So I'm positioned for a longer downtrend, and we're going to see what happens on that front. As far as oil goes, I saw some chatter about, of course, Trump making a potential deal with Iran. Was that solely the basis for oil jumping lower, or was there something else?
I think so, Marco. I think that's all it was. I don't see anything out of the ordinary that could have been otherwise, but I will say that we've seen kind of a pullout or ceasefire situation before, but this time around, for some reason, oil's really moving with it. You know what I mean? Like
Yep.
we've seen it before, and oil kind of moves lower briefly, but then it pops back up because the market knows that it happens all the time. But this time around, it seems to be very significant. So there may very well may possibly be that I'm missing something.
I was scouring through financial juice. I didn't see anything significant, nothing in the red. This latest news seemed to have come out over the weekend. Yeah, pause in attacks, but as far as I'm concerned, I'm still positioned that, or I still think that the strait remains closed, that inflation starts creeping up higher. Although what complicates things a lot for me right now is the Fed is going to be dovish. They demonstrated that last week with saying that with a clearly dovish view. And we have the JPY intervention, which is pushing the dollar to the downside as well. So for me to just jump in and buy the dollar, it doesn't make a lot of sense. So that's not one of the trades that I'm looking to take. I'm actually looking to sell the dollar, but maybe only in September. Maybe like just before, or sorry, during the Fed conference, which is probably going to turn out more dovish than expected, with no hikes. And essentially, yeah, that's how I'm seeing things. But what about you? So it's Monday. We're trying to find new trades, new positions. What are you seeing?
I actually have a similar kind of state of mind, if I'm being honest, Marco. So like I'm bearish on the dollar right now. You're seeing on Friday, Thursday, and Friday, you had a bearish edge finder on the dollar. You're seeing cooler inflation prints. You also had the most recent round of data numbers, which was weaker. So I'm definitely bearish the dollar. I'm obviously positioned that way with euro dollar long, but I'm not overly bearish too. I'm not thinking that the unwind, the DXY is going to be this massive trade or whatever. That's why I'm actively looking on where I could buy USD JPY, for example. That's where I want to kind of reflect that. With euro dollar too, I have a long position here, but I'm only targeting this 200-day moving average right here, which is at 1.16, right? Which, if you go on a DXY chart, that is likely the 99.2 level right over here. So it's not like I'm overly bearish the dollar and I'm shooting for the moon and I'm thinking it's going to go to 95 by any means. Am I not in that camp? I'm just taking advantage of a short-term move, a short-term unwind. So I like that. Definitely the risk, right? If things escalate again and oil picks back up, then inflation fears come back, and then the bond market was right in putting a kind of put on the Fed. But right now, it seems like the dollar short story is working out quite nicely, and so I'm just going to let that ride for a little bit.
Yeah, that seems to be the case. That seems to be the case. So other than going short on the US dollar, do you have anything else that you really like at the moment, or pausing a bit?
I actually do, Marco. So shout out to Max, per usual. Max kind of doing what Max does. Look at Aussie Kiwi here, mean reverting currency.
Okay. Yep.
I like it. You have a potential that if you break this technical support, you also break the 200-day moving average and get a break and retest. I kind of like this to the downside. Let me show you this. Go to top setups. You can see that at the very bottom. Aussie Kiwi, very bearish. I love that. If you go to macro scanners, equal surprise index on the edge finder, you can see that the Kiwi has been done a lot better than the Aussie as far as data releases in the short term there. But then if you look at their inflation, we've noticed that Australia has kind of walked back some of its hawkishness. And if you look at the trend in inflation in Australia, it's kind of pointing to the downside there. Versus if you put on Kiwi, they had a recent tick higher in their inflation. So they were at 3.1% for a good while there. And then they had a recent spike there. So that divergence of Kiwi dollar spiking up in inflation, and then with Australia starting to trend lower there, I like this play a lot via Aussie dollar or Aussie Kiwi short. The only question is, this is only one inflation print out of many, many. So I need to see either this continue to stay elevated or continue higher. But if either happens, I definitely want to be a short seller of Aussie Kiwi for sure. I like that trade a lot. And if you just look at their economic heat maps there, where are they? Economic heat map. You can see here that Australia obviously is in worse shape versus Kiwi. So I like that one a lot.
It makes sense. Makes sense. And we know that the RBNZ has been super hawkish, while the RBA a bit less hawkish, I would say, lately. So selling Aussie NZD isn't a bad way to go, and it gives you some edge without that massive beta to the Middle East, and without the massive beta to the US dollar. So a fresh idea. I do like that a lot. So what Max say? Max is already in a sell position, or is he looking for a break of the level?
I don't know. I just he put it in the chart because I was asking the chat, like, if you have any, charts that you want me to go over. He put it on there, and I started digging deeper there, and I kind of like what I saw. So I'm going to keep monitoring it. Again, I don't want to jump the gun and just short it, because this is one thing that I was looking at for, I think it was pound Aussie. Yeah, pound Aussie, where like, it looked really good right here, but I needed to see a breakout of this resistance and this 200-day moving average, and we didn't get either. And so had I jumped the gun and just bought here, anticipating a breakout, I would have been in drawdown, and I would have still been in drawdown here as prices are right now. So similar framework, I'm going to wait for a technical confirmation. If I don't get the technical confirmation, I'm not going to take the trade, because I just don't want to be stuck in this position and have to fight my way out of it. But with Aussie Kiwi, this is something that's on my radar. And I think too, like looking left on the chart, if the broader trend starts to change a little bit, you kind of have a lot of open room and profit to capture. Like you have the only big structure here that I see from a long-term perspective is all the way down here at like, 1.10, 1.11. You have some other levels here, like here or here, for example, but the big levels are way down here. So that gives me an opportunity to like be here as it's maturing or progressing here, and trail stops along the way. So I like that.
Yeah. Why did this huge explosion happen to the upside? Something that
I think
would
it.
be interesting
Let's see.
to comment on.
I would imagine that it was just the aggressively hawkishness out of Australia in the first half of the year. But this was only right here. You know what I mean? Like this over here is May of 2025. So I don't know, actually. I wonder if, I will say though, like just looking at historical data for inflation figures, that if I go to inflation CPI, Kiwi has been pretty doing well since like January of 2025, right? Like they've had a little bit of whiff upwards, but not too much. Whereas Australia really saw kind of this happen to it. Like it was low as well, and then it really picked up, and it was sticky. It's sticky, and it was sticky up until April of 2026, and now it's starting to cool off there. So
yeah, interesting. That is pretty weird as well for the Aussie to be so lower in inflation when at this exact time the US CPI was climbing up. So that's pretty interesting to see right there. Okay, Aussie NZD. Yeah, other than that, if I'm being honest, I'm not seeing much. I know the SPY has recovered a bit, so stocks have started to recover. That's good for individual stock picking, so I may need to go back to buying breakouts, but it still seems a bit flat. We're still not getting all-time highs. We're still not getting a breakout out of the resistance. So yeah, for me personally, I kind of am focusing on still buying the yen. Other than that, I'm trying to get my thoughts together and rationally think about what's going on right now. Where's the edge? What can I do? And as far as at the moment, the dollar is kind of very tricky right now. I don't have a clear stance on the DXY, if I'm being honest.
So you mentioned you were trying to buy the yen, like continue the USD JPY to the downside.
So I'm still in my short position on Swiss yen. I'm just gonna keep on holding that. That's the plan. So not really add on more size, but just keep on holding that short. That's my game plan at the moment.
I mean, dude, this thing is and I'm sure it's just going to become even more attractive too as the yen move continues. Like this is the chart with like no swaps, right? So like if you're going to participate in it and hold it for a while, this is the way to go. Dude, what a clean breakout too, I would say. Like big nice candles here to the downside once you broke this level of support and this 200. Pretty clean.
I was tempted to close it. Fortunately, I didn't. But yeah, the temptation to close it half of the way was pretty high, because you just don't know if the intervention will continue or not. The data tells you it will, but you're saying, come on, I need to bank some profit from this. So yeah, it looks like it continued again, and it was a two-day thing, two-day intervention.
You do have a gap here at 186.
Yeah,
This could be a level worth watching here for support dip buyers that I could see
absolutely.
there. So that's still ways to go, man. So GG on that. I would hold that.
Thank you.
I would.
Thank you.
I don't know how I would trail it though, if I'm being honest with you, just because
Tough
these
to
moves
trail.
right here have no technical structure. Like they have no. You could have this happen, and then it could just go like here, and then on the same day it can go this way. You know what I mean? So
yeah,
that's the tricky part about that.
Maybe 20 MA. Usually I play it with the 20 MA if there's no key levels. So that's the tricky part. But I think the fundamental story for Japan is pretty good. Like the government, for example, if you have been watching the government, Takaishi and the gang, they're losing popularity, so they're losing votes. And
are they? Oh
yeah. So by the polls in Japan, it's not looking great. One of the main pet peeves of the Japanese population is that the yen is losing so much purchasing power. So I think to get the votes back, to get the popularity back, they will do anything they can to push the yen to the upside. Of course, the Nikkei is going to suffer. That kind of makes sense. I think Nick is in a nice short position on the Nikkei. So that's a pretty good trade. You can either buy the yen or you can sell the Nikkei. It kind of is interconnected. Well, it definitely is, because the Nikkei is quoted in yen. So yeah.
yeah, I think on Nikkei you definitely have very good probability that you probably at least test the 200.
Could be. But what's your forecast for stocks? What do you think happens there? Just nothing until September or October, and then we pick a direction. Just summer trading.
I think that if you start to see, I mean, oil's lower. You have yields lower today. I mean, they're actually starting to pick back up, but nonetheless, yields lower today. Let me look at Fed Watch real quick.
By the way, Tiger said that he can't make it today, right?
Right. So
so I'm going to be wrapping it up, I believe. Okay.
Yeah.
Okay, cool. Yeah, sure.
Fed Watch. I mean, we still have 2 rate hikes priced in.
Yeah,
which is at one point we were priced in for 2.5. So I don't know, man. I think I kind of question this too. I think this is going to reduce even more. I think it'll probably be just one insurance rate hike, like you mentioned before in the past. And that right there within itself, although it is a rate hike, it is still more dovish than the current pricing. I think that I think stocks can continue drifting higher, man. I think so. I know there's a lot of fears about the AI bubble and this and that, but again, the bubble is probably only half full or a quarter way full. You could probably have a lot more room to go. So I think that this can continue chopping higher, but that is not a fun market to be in, because you are every day you are worried, you are questioning whether, is the bubble getting more full, is it close to popping, and that's not a fun market to be a part of.
Yeah, this chop is not helping anyone. As I told you, I'm following a couple of stock traders, and most of them are sitting on their hands, because even though the S&P is kind of on an uptrend, if you look at the EMAs, and if you look at, well, basically the EMA is just, it's still flat and range bound in the very short term. So if you're going to be buying breakouts, you'll get shopped around, and you'll take many small losses, maybe catch one winner, but the winner is not going to be anything significant, and it's probably not going to be enough to pay for all of the losses. Personally, now that you mentioned the Fed, I think the trade is going to be run up into the Fed. We go risk off, dollar catches a bid, and then after the Fed, dollar sells off because the Fed turns dovish, and we go risk on. So if we can do those, two decisions this year, which means 4 trades. So basically into the Fed, buy dollars, risk off. After the Fed, sell dollars, risk on. Yeah, it could be. It's not free money, but pretty easy, because I have a stance where the Fed is just not going to hike. They're not going to hike unless inflation goes to crazy numbers like 6 or 7%. And I told the viewers I'm going to stop with the 6-7 joke because it's getting a bit old. But it's always I'm always saying 6 or 7. It's always somewhere in the markets. Here, the S&P is at 7.6.
7, yeah.
Yeah, so I can't stop. But that's the easy trade. Those would be the easy trades that I can see right now.
I'm gonna stick with that framework too, Marco. I mean, I've been on this camp where like I think the market's kind of overshot its pricing, and I think that likely just you see the Fed buy time any chance they get.
Yep.
With oil lower, that raises the question of down 9.2 today. That raises the question where like you had lower oil prices in June, CPI and inflation came in pretty dang good, I would say. If you continue to see oil prices lower in July, that would probably be another round of cooling numbers. And so that'll even buy the Fed more time.
Mm-hmm.
And then the big question would be labor, right? NFP, the next round of NFP, if you see a deteriorating labor market, that would only give the Fed even more reason to be dovish because they would have to, especially if inflation's taking care of itself. If inflation's taking care of itself and you also see forward-looking indicators like oil prices lower as well, that could have the Fed justify a reason to let inflation do its thing while we target labor, and that will be dovish. So I'm in that same framework too, man.
Yeah, and the Fed is basically doing what Benamala says, pray and delay. So essentially, they're praying for the CPI to drop, so that they don't have to hike rates, because hiking rates is the least popular option, and the Fed definitely hates doing that, even though it's needed. Right now, it's needed. But yeah, by the way, there's a new podcast with Benamala. It's usually released every 6 months to a year. So for anyone watching him, you can find a new podcast on, I think, the Iced Coffee podcast.
Yeah, Graham Stephan. I love Ben.
Yep. So yeah, it's a pretty fun podcast always with Ben. It's always fun.
We have a stacked week too, man. We have manufacturing, so we'll see what's going on with the growth there. We have ADP non-farm, which is a forward-looking indicator, some say. Then you have non-farm and unemployment rate too. So the first Friday of the month, we'll see how that happens. But Mark, I'm going to go ahead and pivot out here, man. I'll leave you to it, your portion of the segment.
Sure.
Thank you for the conversation, and things are starting to move, man. I'm curious to see what happens with yen. If you look at a 5-minute chart, it's starting to pick up now. What? No, I'm tripping. Never mind. Don't worry. Don't scratch that. I thought it was moving, but it's not.
Yeah, I'm surprised by what oil is doing today, because it's just rumors, but it's the markets. So thank you, Alan, very much. We'll talk tomorrow, and let's think of some more trade ideas and see what we can do for this week.
All right, man. Have a good one. Bye-bye.
You too. See you. Goodbye. So let's continue. Let me mention the sponsor of today's show, which is going to be Ola Prime. So if you're looking to get funded, I want to show you that you can get 20% off with the code A1 Live for Ola Prime. You can find the link for Ola Prime in the description of the stream. You can find it on the screen with the QR code. Basically, Ola Prime, you get a great price with our discount. They don't have a consistency rule, which if you're a swing trader and you have dealt with the consistency rule in the past, you would know that it sucks. And the third thing, their reviews and customer experience is really good. As I always mention, whatever you buy online, always check out the Trustpilot. Ola Prime, 4.5 out of 5, free K reviews. For this niche, which is the prop firm niche, which is full of scams, these reviews are pretty good. Okay, so read through them, read the good ones, read the bad ones. Yeah, I see mostly 5-star. There's a 1-star here on the top, but again, some people maybe don't understand how the rules work. But some people may just have a bad experience. You never know. Anyway, read the reviews, Trustpilot, join the Discord, go on the A1 Discord as the members. I know a couple of members did get steady payouts from Ola Prime. So 20% off, A1 Live. Let's see. My DXY stance is neutral. Took a stab on USD Swiss. Nice on Marco. Hold it on. I will do. So for now, looking at Swiss yen, holding the position, holding the short, and we will see how that plays out. So let me just see something here on my side browser. Give me 1 second. Let's see. Okay. So I'm in Swiss yen, and the game plan is to hold part of this position, hold a part of it because I closed 30%. Maybe I'll close some more right here, but hold a part of it for the next couple of days, weeks, and see what happens on that front. GJ going lower. USD JPY, RNZD, DMXN. Yeah, so basically, as I was saying when I spoke to Alan, it's Monday. I'm reassessing the markets. I'm looking at many different currencies, many different things on my charts, on the screens. I'm trying to find new trade ideas. The main one that I still have is buying the Japanese yen. Around the dollar, it's very tough to get a clear view. The dollar is pretty tough to read. So not exactly sure what I will do on that front. As you know, if you're a professional trader, you should have a stance on the US dollar. The problem that I have is the intervention is pushing USD lower. So that is creating a bearish pressure on the dollar. Then you have the Strait, which is still closed, but oil is falling. That doesn't make any sense in my personal opinion. The Strait of Hormuz being closed and oil is falling. So oil falling will now probably print a cooler CPI, right? So the Fed is going to stay dovish no matter what. My bet is still going to be around the Fed. The bet is still going to be to sell the US dollar because the market is still expecting a rate hike. Fed Watch tool, let's take a look. So let's see here. 16th of September, yeah, 62.7% chance of a hike. I think this is wrong. Should I just sell the US dollar? Maybe. I'll think about it. October. Okay, so the probabilities are telling us we have mainly an expectation of one rate hike this year. I think that's not gonna happen. I think they will hold the rate at the current target, and that's about it. Just from the speech from Warsh, from watching the press conference on Wednesday, that's what I'm seeing. I'm seeing another chairman that is going to be more dovish than basically expected, that is going to basically turn his cheek on high inflation, and we need to trade accordingly. Did you hold your UJ? I didn't have a short on USD JPY. I have a short on Swiss yen. And yes, I am still holding this one. So I am holding this trade right here. How about you see the DXY on the weekly time frame? DXY on the weekly. If I'm being honest, I don't care about the chart when it comes to the DXY. I'm just trying to paint the scenario. I'm trying to paint a picture here. So I don't really care about the levels. I don't really care about how it looks on this weekly time frame. I just care about the Middle East, the Strait of Hormuz, Trump and company, the Fed, and the intervention. Those are all of the pieces that you need to assemble and then get a clear bullish or bearish reading. Right now, the reading is very foggy, very foggy. Gold, we did not look at gold, so that's important to mention. When it comes to gold, it's flat, it's doing nothing, it's boring, and for me personally, makes no sense in doing anything here. Buying, selling, nothing. It's a waste of time, but I know you guys want to see it. I know a lot of you are trading gold. I think we're stuck here above support, below resistance, and this is kind of coiling, tightening into the triangle, and then you get a breakout to the upside or to the downside. At least I hope we get a breakout, because there's another scenario where this can just range around for a very long time. It is a bit concerning. It is a bit concerning that gold did not rally on a dovish Fed, while stocks definitely did. So the Qs rallied, the SPY rallied as well on a dovish Fed, a more dovish than expected Fed. Gold didn't do that. So a dovish Fed should be bullish for gold. That did not happen. Okay, that is a problem. That is an issue. It's telling me something is broken. It's telling me something is wrong on this chart. So a bit concerning, and it makes me stay away, definitely. So that's about it from my segment. I want to repeat, if you want to get funded, do check out Ola Prime, 20% off, A1 Live. Link is in the description. Okay. We're going to wrap it up here, because I think that Tiger has said he won't be able to join. So you can catch me tomorrow. I'll be doing 2 segments, an early segment and later segment. Good luck in the markets. For all of the trade ideas, join the A1 Trading Premium Discord. And that's about it. Thank you. See you in the next one. Goodbye.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edgefinder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.